I'm live. There we are. Okay. Let's get that centered. Okay. I should be getting my notification on YouTube soon. I can see there it is. I'm live. Did you hear all that? Let's go. Your thoughts on this? Could the bullish sentiment among Tesla investors stem from the optimism they have from SpaceX success? Well, I think there's a halo effect there, sure. The reasoning might be that if he can achieve it with SpaceX, he could also succeed with projects like the Cybertruck and Optimus, no matter how far-fetched or scam-like they may seem. I think the big difference there is SpaceX is solving physics problems. So they can be solved with the right ingenuity. You can solve a physics problem. It is a complicated problem that can be solved. Autonomous vehicles and I don't think is a problem that can be solved on its own. I think the solution is when everybody starts doing it, when there is a lot more sensors in the grid itself, so that you don't need these big data sets, you don't need these neural nets, you don't need this heavy compute in the vehicle. You don't. It would just be everything is Bluetooth enabled and 5G ready, and every car is communicating with every other car. So cars that are 5 up on the road, if you're in a long line, that car already sees what's on the street, and you already know without your cameras having to see it, which means I believe in the future, all these big data sets, all these big neural nets have a value of zero, a value of zero. It's a different problem you're solving. A physics problem has a solution. You just got to figure it out. Have a look at the Manhattan Project, right? Something that's never been done before. Can we split the atom? They solved it because it was a physics problem, so it could be solved. What he's solving here is not a physics problem. And in SpaceX, he doesn't have a lot of competition knocking down his door. There's not a lot of people doing what he's doing. So the pace at which they're moving isn't benchmarked against the pace of which everyone else is moving. But in the EV space, he's being lapped and lapped and lapped and lapped. There are far better looking vehicles out there than a Tesla. There are far cheaper EVs out there than a Tesla. There are batteries with far longer range than a Tesla. There are vehicles like the Mercedes, which is a level 3, which Tesla is still a level 2. There are companies out there that are far ahead of them on robotaxi and will only get better. Will only get better. He has an incredible pace of competition in that space, which Tesla's never had to deal with that much competition before. And the problem they're solving is not a physics problem. A physics problem has a solution. You just have to find a way to solve it. This may not have any solution at all. So I think that's the big difference. Keep a bigger picture, not able to see your face properly. Oh, on the thumbnail. I don't know what happened there. It just shrunk it down significantly. TLT going down in spite of Fed cut, trying to work out explanation. Well, the short end of the curve is primarily a function of the Fed funds rate. The long end of the curve has sentiment in it. The further away you get from the Fed funds rate in terms of time to maturity, the more thinking becomes involved. A 3-month T-bill rate is going to reflect very closely the Fed funds futures without much deviation at all. But a 30-year, there's a lot that can come in there. There's issues of growth. There's issues of debt. There's issues of the amount of supply that will be coming online. There's issues of the level of inflation that we're going to get. There's along with the Fed funds rate, the level of the short rate. So there's a lot more that can get involved in the long end of the curve. So it's not a 1-for-1. It's not like Fed lowers rates and TLT goes down or TLT goes up. TLT did go up on the rate cut. It did go up quite considerably. But then the idea of, well, maybe they won't cut again. Maybe they're on hold. Maybe there won't be a rate cut. The economy's really strong. You don't need any more rate cuts. Oh, inflation came in a little bit higher. We say that the Fed is too data dependent. What about the market, right? I mean, that's the kettle calling the pot black. What about the market? The market is so bloody data dependent. All it sees is what's right in front of its face at that moment in time. If I were playing pool with the market, I would win hands down as soon as I get a shot, because when you play pool, you play your second shot, not the shot you have. The market would be playing its only shot and then wondering, well, what's my next shot? I would have already set up my next shot. So, the market is just as data dependent and data driven as they accuse the Fed of being, in a disdainful way. And I think they're wrong. I think they're wrong on rates. I think they're wrong on the market. What is going on is every day the market tends to price in the exact same thing it priced in yesterday. It's the same story every day. Why is the market going up? And a list of things come out, the same list of things 100 points ago. All right, well, that's the same list. How many times do we price in the same list of things? And then lists that don't matter. There's a lot of money on the sidelines. No, there isn't. No, there isn't. There's no money on the sidelines. It's in the game. It's already in the game. So it's the market does go to extremes, and I think on yields the market is at extremes. Now, that's me thinking that, and I will put my positions in the market based on what I believe, which I have. I have big duration exposure and a fairly large bet on TLT being near a near-term bottom for now and going up. I think the Fed continues to cut. I think deflation is the backdrop story. I think that mounting government debt won't matter as long as it fuels growth. And a debt crisis only happens, not because of the sheer amount of debt, but only happens when bond holders think they won't get paid. Then they don't want to hold it. Until then, there'll be no crisis. And if there is a debt crisis, whose debt do you want to hold? As a fixed income fund, whose debt are you going to hold? Oh my God, the US is in bad shape. Let me hold China's debt. Like, whose debt are you going to hold? Whose market is big enough for you to deploy capital in? If the US is in trouble in their debt, I can guarantee you the rest of the world is in a shitload of trouble. So I'm good where I am. Only concerned with minimizing your portfolio risks. No, not minimizing my risks. If you minimize your risk, you may as well be in T-bills. There, you've minimized your risk. I'm not concerned with minimizing risk. I'm concerned with managing risk. Only the risks that I want. So I don't mind going long in an overextended market if I have some short beta. What am I doing when I do that? I'm getting my short beta through futures, which is costless to get. And then I can get long beta through either options or just buying the outright stock. I choose options because I get leverage. So I'm getting the outperformance, the alpha, and you lever that up. I'm comfortable with that because if the market really tanks, at least I've got short beta. The market goes up, my bet is that the extra longs I have will outperform. So I manage the risk that I have. I don't minimize the risk. Those are two different things. How do you determine the appropriate PE of a company? Industry specific and also a function of its fundamentals, right? Revenue growth rate, that's, you could say that is one thing, and it really depends. When you talk about revenue growth rate, you're really talking about a growth company when you're talking about revenue growth rate. Revenue growth rate can be stolen with cost growth rate that's higher. So operating income margin is probably a good one to look at as well. How stable is the operating income margin? Or is it growing at the rate or even more than the rate of growth? So if you have 10% top line growth and 15% operating income growth, you have operating leverage in there. That's positive. But if you have 10% growth and you're just getting 0% operating income growth, well, that kind of sucks. So you can't just focus on growth. Give me the stock, give me the sector, and I can tell you what's probably a better way to look at it in terms of coming up with a PE. When you are 7 days before maturity and in the money, can the contract price still move a lot in the wrong direction? The contract price is not going to move without the underlying price moving. So it's the underlying that will move. So can the underlying move? Yeah. Yeah, it can. When you hear a piece of news about a stock you own, how fast do you react to the news and take action? It depends. If there's it would, for me to move fast, it's going to have to be bad news, like really bad news. That doesn't happen that often, or it has to be, or said another way, one-way news. So let's say that I'm short a company, fundamentally weak company, and it's trading at a ridiculous multiple, and it gets a buyout offer from a serious buyer that wants to buy the company, even at a ridiculous price. Wow, that's one way. That's not reversing, right? I mean, at that point, the damage is done, and the options aren't going to help you. There's very little you can do at that point. Very little that you can do. So shorting is, when you short, it's not like the same as being long. Long, you can buy and go away. Short, you cannot. You must be tactical when you're short. You have to be tactical. So you have to short very carefully, right? Buying puts is probably the better way to short, unless you're so sure that something's not going to get a buyout. But as far as how fast I react to news, I read it first. The market tends to really overreact to news. It will price in events, which is an opportunity because something is just an event. A trend is different. So how do we determine whether something is an event or the start of a trend? You don't know. Welcome to the game we play. That is what we do. We have to figure that out, right? So if you said to me, "What's a strategy to win at chess all the time?" I don't know. depends on your opponent, right? Well, our opponent is the market. What's a strategy to win all the time? Beats the hell out of me. There is no strategy to win all the time. You tell me what's going on, and I'll tell you what I think the best option is. But to come up with an algorithm that says just do this, doesn't exist. Doesn't exist. Uranium stocks currently trading high PE. Yeah. Do you believe this represents a potential short? Nope. Nope. Or do you think they'll catch momentum from the broader AI-driven trends? Will they go higher than an already high price? History has shown that high prices can go even higher and low prices can go even lower. History has shown that the market can be mostly right. History has shown that the market can be mostly wrong. Which one is it? Is it a high price that can go higher? Is it a market that is mostly wrong? A market that is mostly right? Beats the hell out of me. I don't know. You have to make that assessment. But it is a social psychological momentum buzzword. Uranium, nuclear, AI. I would not short it just simply because you can't control how other people see the world. And right now, the market sees this, what's right in front of its face, and that's it. It's not playing three-dimensional chess. It's not playing, 8-ball where it's playing 3 shots ahead. It's not playing that game. It is what's right in front of its face, and that's it. And if you try to say look past, nope. You say, come on, look past, nope. That's it. So with these types of markets, I don't know that it's worth being too smart. You really just have to play what's right in front of your face and not think any more about it. Earnings season comes. What key sectors, companies do you go through? I can feel allergies starting, and I don't know why. What key sectors, companies do you go through earnings reports to get a feel for potential market trend? This is a tech-driven market, plain and simple. It's not an industrial-driven market. So industrials report, but they're not part of the narrative. They're not there at all. So really, there's only one company that matters for this market rally. There's only one that matters, and that's Nvidia. So we don't have a stock market. We have Nvidia. That's that's it. AI hype, and that's all it's going to be is Nvidia. If Nvidia fails, this whole thing crashes. The whole AI story starts falling apart very quickly. As long as Nvidia keeps going, the AI story keeps going, this market keeps going, and it'll drag everything along with it. Right. So there is only one stock that you have to care about, and it's Nvidia, and it reports earnings last. So you can have an ugly earnings season, and Nvidia can knock it out of the park, and we're going higher. We're going higher. Period. There is only one stock in this market. Only one stock. Given high FX rates in developing countries, especially like the Middle East, 300 can represent over 2 months' salary. Oof. Could you offer a discount to make the applied level more accessible? No, in fact, I'm near the point where I'm going to be making the applied level less accessible. Um, so here's what is going to happen is I need a certain quantity of subscribers, of which I'm getting very close. I'm about 80% of where I need to be. And it's a rather large sample. So I'm very thankful for that. The problem is the content continues to grow. My subscription costs to data continue to grow because as I do more things, I need more resources. My bandwidth on servers continues to grow, but if I stopped right now, whatever revenue I have, eventually all of that would be depleted over time because my costs would still continue. So this model of pay once, lifetime access is not a sustainable model because you need to keep bringing more and more people in all the time. And at some point, it's going to become an unsustainable model. It was never meant to be a long-term model. It was meant to get a critical mass of people using the product. So at some point, it will be the one fee for life will be gone. What the purpose is as I introduce new content, I get feedback. I get feedback on what people like, and I move along with that feedback. And there are some things that are getting close to completion where I can say, okay, I can take this and put that out as a separate product all on its own that doesn't require a lot of maintenance going forward. So the 320 for accessing the applied level is going to end at some point. At some point, I'm going to restrict it to be just candidates who are subscribed with Mark Meldrum. Nobody else outside. Anybody else outside would buy the standalone modules that do not grow. So take something like the financial modeling I'm working on now. By far, in terms of views, it's off the charts. It's the biggest one. So that tells me to lean into that. Once I'm done with it, then it's doing another pass. So Costco is we're getting 3 to 4 weeks and we'll be done that part on Costco. Then next summer, I will probably take 3 or 4 weeks and I will bring the quality of it up. I will update it to 2024 and I will bring the production quality higher and combine it with some notes. Then I will spin that off as a separate module that doesn't change. So the group of people that are in the applied level are kind of like my test market. It's like, well, what do you think of this? What do you think of that? And I get questions and feedback. And sometimes, well, what about this? Is this wrong? And I'll look at it and go, yeah, you're right. That is right. I missed on that. So that I make a little note of where I need to do my edits later on. And then when I do the next pass, that's what I do. So I wouldn't be lowering the price at this point or making it more accessible. I'm near the point where I'm going to start making it less accessible because again, you have to look at the long-term business model. This is if this were the end goal, anybody would say, but that's unsustainable. You have no recurring revenue on that. It's unsustainable. It wasn't meant to be long-term, right? It wasn't meant to be long-term. So long way to answer your question, but I probably wouldn't lower the price. No, I'm sorry about that, but there are certain real costs on my side that I must incur. You did lose a lot of weight. Your low sugar diet really works. I don't know that I call it. It's not low sugar. It's low glucose, not fructose, but low glucose and low carbs. How restrictive is your diet? Do you still take fruits and maple syrup? um, Hang on a second here. So I weighed myself this morning, 217.8. I'm under 218. This is a 20-year low for me. I mean, that it's incredible how well it's working, and it's accelerating right now without me losing strength. That's the biggest problem with weight loss is if you try to lose weight too fast, you actually cut into the muscle. You start losing muscle mass, and you find your performance in the gym suffering. That you can't do the same reps anymore. Instead of doing 10 of your high weight, you're doing 8 or 9, and you're failing. Um, it's it all changed when I switched to managing insulin levels instead of managing calories and attempting to keep insulin levels low. And what do you do to keep it low? That's, and I went from 235, 236 down to about 228 over the course of a month and a half. And then I stalled. I hit stall speed and I was 228, 229 for almost a month. And I wanted to give up. It was like, okay, well, look, it's not working. Why am I restricting my enjoyment of different types of food if this shit's not working? I'm going to give up. Then I broke 228, came down to 222, 223, and again went sideways for a while. And I thought, well, okay, this is where I'll end up. Kind of a drag, but okay. Now I'm under 218. So, that gives me motivation to keep going. As far as how restrictive my diet is, I don't eat till 3 in the afternoon. I'm up at 6 or 7 a.m. and I don't eat till 3. And I try to finish around 9 as best I can. And the closer I get to 9, the less likely I am to eat anything significant. I eat one big meal at 3, and that pretty much carries me all night. I haven't eaten since 3. I'm not hungry at all. Your body adapts quite well. So now my body is now a fat burning body. So even if I cheat every now and then, it doesn't really affect my body that much because I don't have a lot of glucose floating around. So when I burn calories, I'm not burning glucose, I'm burning fat. And when I'm at rest, anything after 12 hours of fasting, it's fat burning, right? I couldn't lose weight for the longest time, no matter what I did. 2 hours of cardio, an hour of cardio in the morning, an hour at night, 1,000 calories on cardio each time. Nothing. I thought this is the oddest thing in the world, and for years I was trying to lose weight. And I thought, well, look, I can break down an industry. I can break down a stock. I can break this down. I just need to do the research here. So you start, right? And, don't eat this, eat this. Don't drink this, drink this. Don't do this before this time. Try to do this before this time. It's like every time you read something here, you'd read something over here that said the exact opposite thing. And it took a while to, trace it down to its core. And when I got to the insulin part, I thought, well, this is making a hell of a lot of sense because that's the whole basis of Ozempic is to control those insulin levels. But this is doing it without drugs. That makes a lot of sense. So I accidentally discovered the Atkins diet instead of just going and Googling different diets. What I ended up with by eliminating, you look at a chart of foods, low glycemic, mid glycemic, high glycemic, anything on the high glycemic, gone. Anything on the mid glycemic, look at the low glycemic. Can you substitute? If you can substitute, right? Don't get rid of everything, but substitute as much as you can. Turned out that what I ended up in the end with is the Atkins diet. And I can tell you it works. It really works. If you have the discipline and you stick to it, it works. Now, the first week is rough because your body's going to crave carbs. You're cutting carbs out of your diet. And cold turkey is the only way to do it. Don't slowly get rid of the carbs. Cold turkey is the only way to do it. The first week is rough because you're hungry. You get to 11 a.m. and you're hungry. 12, you're hungry. 1 o'clock, you say, I'm never going to make it. I'm never going to make it. After the first week, it gets easier. Now I sail right into 3 o'clock without even thinking about it. It doesn't even occur to me that I'm hungry at all. I sail into 3 o'clock. Sometimes I go all the way to 4. Sometimes I'm doing something, it'll be 4 o'clock before I actually eat, and I'm okay with that. And it works. Now my body is used to it. Now I don't have cravings. I'm pretty okay. And the weight is just, the fat is coming off. The key is I'm not losing strength in the gym. If you're losing weight and you're losing strength in the gym, you're losing the wrong weight. You're losing muscle mass. You're doing it wrong. If you are losing body size, like, you're weighing yourself and your weight is coming down, but your strength continues to maintain or go up, that's what you're looking for. That's where I am right now. So yes, I have lost almost 18 pounds since I started. Where did we leave off? There we are. Given my belief in gold, I'm curious, what if one day gold could be lab produced like diamonds? I don't think it can. A diamond is not an element, right? It's a compound. It's not an element. I don't think that you can produce an element. The amount of energy you would need to get that done, because that's particle fusion, right? That's what a sun does at its core. No, I mean, my chemistry and my physics may be way off here, but I don't think that you can lab produce an element. Besides, that's alchemy, and that is, I mean, how long have we been trying to turn, or society or humanity be trying to turn lead into gold? You're attempting to create an element. I don't think you can. Elements, I believe, have their property by being naturally occurring, not synthesized. You can synthesize a compound, I think, but not an element. If I'm wrong on this, somebody leave a comment. If somebody is more science-based on this, leave a comment, but I think it comes down to that. I use price chart to determine particular stock price is up or downtrend, and if particular option strategy applicable, also draw support resistance line, choose a strike price. Is it considered technical analysis? Yes, it is. Would you suggest to abandon it? None of it works for you. What tools from TA would you use and which not? I use none. I really don't use any. I look at a chart. And I've made this analogy before. If I'm traveling to a particular religious community or religious country, to ignore their religion would be dangerous to me and stupid. But you should at least know what they believe in so you don't get into trouble. So when I look at a chart, I don't believe in lines on charts, but I'm going to look at it just to see what the crazies are looking at, right? Because it could affect me. So if there's some obvious pattern on the chart and it's a fairly well followed stock, I know the crazies are looking at the lines on the charts and screaming about what the future looks like, right? So do I really want to fight that if it's an obvious pattern? I'll look, but beyond that, I don't really care about lines on charts. When should one use a bull put spread? The bull put spread is when you think the stock will not breach the upper strike. And when a bull call spread, well, when you think the stock is going up, but you don't want to pay for one call all by itself. I find no value in the bull call spread, either be bullish or not. And applied options, former is income. It is. Latter is directional. Why? Well, because the first one, the bull put spread, if you're right and the stock goes up, you don't benefit at all from the stock going up. All you can make is what you received in credit. That's all you can make. Stock goes up 300% in 2 weeks. You're not going to do any better. So it's not a directional trade. It's just for income. Whereas the bull put spread, if it goes up and runs through your spread, you make money as it goes up. It's a bullish position, but you pay for that. You pay to put on that strategy. So it can't be an income strategy if you're actually parting with money. So you must rely on direction after. calendar spread considered income or directional? Could be both. Does it depend on how one will set it up? These are a theta play. If it's set up as a theta play, it's income. Directional, well, there you go. You've answered your own question. Exactly. How do you manage risk for events like Lamb Weston on expiration date? I had negative, Lamb Weston with bunches of October, November, short calls, short puts, was positioned for a business as usual. Here's a rule. After a stock is being beaten up, never sell calls on it. Its last earnings report that it had did not indicate that we should be selling calls on this guy. You sell puts on pullbacks, which is what I did. I sold strips twice. But you're right. Things like this can happen all the time. Is you get an event that happens and it ends up being one of these one-way events where, well, what can I do now? Right? But it's not a buyout. It's just an activist investor. This could just simply die away over time, or it could go higher. At this point, I would keep the short puts and I'd get rid of the calls. And I'd probably put more short puts in at 70. Being that you have this activist investor in, I'd probably say, okay, well, I'll take my hit on the calls. Fine, that wasn't wise. But now I'm going to sell 72.50 and $70 puts, because if it gets put to me, I would want to own it anyways at that price. There'll be more drip news as going on because you have an activist investor. So they're going to want something to happen. So there's going to be a drip news feed on this one. So yeah, I would just take the hit on the calls, keep the puts. Why pay to close the puts? And probably put more puts on. What are your thoughts on this? With the growing demand for energy and energy storage, supplies of raw materials such as solvents, specialty materials are likely to experience growth in the near future. Okay. Materials will be crucial in making energy storage more efficient, durable, and cost-effective. You could say the same thing for anything. If the demand for vehicles are going up, wouldn't you want to be in steel and aluminum and rubber? Sure, right? I mean, all you've done. Google Hayekian triangle. Hayek, as in the Austrian economist Hayek, Hayek, and Google Hayekian triangle. And it basically gives you along the bottom the value chain, going all the way back to suppliers, all the way up to the retailers, mapped to the level of the interest rate, and where you should position yourself depending on where the interest rate is. That as the interest rate goes higher, you have a triangle that goes all the way back in the supply chain. But as the interest rate goes higher, you should move up in the supply chain towards the retail, and as rates go down, you should move down the supply chain towards the supplier. So it is consistent with a falling rate environment if you subscribe to the Austrian economic view of the world. It is consistent, sure. How do you assess a potential candidate when purchasing share stocks of a company? I want a good story. Do you look at cash flows or EPS? I look at a bunch of things, but I really want a good story. How do you assess if a company is overvalued? There is the science of finance and there is the art of finance. The art is something I can't teach you. The art just comes with experience. Finance is neither a pure art or a pure science. It's a craft. So there is some understanding that you need, and you're hitting the right things. EPS, cash flow, things like that, overvalued, undervalued, great. The art part of it is figuring out what matters, right? You could find a company that has some cash flow problem, but a great story on how they're going to solve it. And you could read that and say, okay, well, that makes sense as long as they're undervalued right now. And you could find some companies that appear to be overvalued, that when you look at them a different way, you would say, well, hang on a second now. The metric on which I am looking at that says they're overvalued is the wrong metric to use on this particular company. So, for example, with REITs, a multiple of PE is the wrong way to evaluate a REIT. It's a multiple of FFO or AFFO is what you would use. You use a different metric. Some companies you would use different metrics. So you're in the right neighborhood in that you have the science part of it. You're worried about the things like cash flows, EPS, great. Now you have to kind of let the notes on the page go and start improvising around the notes, right? That's the art part of this. There is no easy answer for this. Given a stock and two people with different views of the world, you'll get two different outcomes. That's what makes a market, and that's what makes this game so hard to play. If everyone agreed on everything, algorithms would run the market and we wouldn't be here. I would be hosting a live event talking about computer programming and how to write the algorithm, because finance would be taught in computer science if it was algorithmically driven. But it's very strategic. Sometimes it's a play on the fundamentals of the company. Sometimes it's a play on the psychology of the market, regardless of the fundamentals. Right now, we have a very psychologically driven market. We have what Keynes would call animal spirits. If we return to the fundamentals of the market, I think some things would have to change. But the market is really a collection of people with beliefs, with fears, with desires, and the narrative can rule the day. So you have to get that too. Have you used GovZ? No, it's iShares 25 plus strips. You can do that yourself. How liquidity and options, but and if you have no options, why even bother paying an ETF, a management fee, to do what you can do yourself? Right at the top of IB, there's a little icon, looks like a shield. It says Treasuries. Go into Treasuries. You get a menu up on the side. There's one that says Type. Scroll through that little thing till you see strips, and you'll get all the strips you want. 25 years, go out 25 years, take one. The thing about the strip is it's a zero coupon bond. It has no coupons. It just matures at its principal amount. So it'll be really cheap to buy. And its duration is its term to maturity. So if it has 25 years to maturity, take its term to maturity divided by 1 plus the yield. Its Macaulay duration will be 25 years divided by 1 plus whatever yield it is. There's your modified duration. Right? That's the first derivative of Macaulay duration, a closed form formula for it. There's your duration. It's got huge duration. That's all it has is huge duration. But it's zero coupon, so there's no income, there's no dividend yield, and you're going to pay a management fee, which means you actually underperform the very underlying that it's giving you. You can do it yourself. You don't need GovZ to do what you can do yourself. Learning so much. Just wondered if you had any thoughts on the results implications of the BC election yesterday. Yeah, it's in recounts, right? One vote. Yeah, one vote. You go into recount. So I think it's going to be a while before you know who the winner is. I think it's 2 ridings have a recount. But I think your question is more about what is the implication that the races between NDP and PC. I think that's a function of Vancouver. You wouldn't see that in Quebec. You wouldn't see that in Ontario. You wouldn't see that in Alberta. Well, maybe it might at the provincial level. I don't think you'd see it in the Toronto area. The Toronto area, it's going to be a race between, in almost every riding, a race between Liberal and PC, with PC edging out, I think. But Canada is not a unified country politically. It's very regional, right? With some parties dominating in some provinces. So BC has always had more of a leaning towards green and orange rather than blue and red, whereas Quebec has always had leaning towards the light blue, the Bloc Québécois. And Ontario's been split between blue and red, with Toronto almost always being heavily red. The western provinces, past Ontario, being heavily blue. So it's if it were a different province, the runoff would be between 2 different parties. The Liberals aren't there, which I think is telling. I don't want to see Trudeau go anywhere, because this will be a wipeout for him. His party this will be a wipeout for the Liberals. And as soon as Jagmeet has his pension, he will be more than willing to take down the Liberal government for an election, while he still has, more popularity, or while the Liberals have no popularity. Not that he has more; it's just the Liberals have no popularity. So he might capture some of the Liberal vote that would never go Conservative anyways. But let's be honest, he wants what he wants first, then the country is second, but wait till he gets his pension. I think it's March, and then he'll be willing to do something. In the meantime, I don't want Trudeau going anywhere. I want him to be very well aware of how much he's being thrown out, just so that he can go into retirement knowing without a doubt that he is not liked by anyone, not even Liberals. I want that to be crystal clear to the little kid, crystal clear to him. I think it's a mistake going NDP. I think it's a big mistake for the country, because the NDP tends to rely on an unsustainable form of revenue generation, which is taxing successful people. That is unsustainable in the long run. You need a wider tax base. I would support a higher consumption tax, like 20%, before I would support taxing successful people even more, because success in Canada means you are a minority shareholder in your own life. The government takes more than 50% of your income. After all taxes from all sources, you're somewhere around 62, 63% of your income goes to the government. That's a ridiculous expectation from a small group of people, that they'll be expected to pay for everything. It's a ridiculous expectation. A consumption tax makes a hell of a lot more sense. So I would be very careful with NDP. Sold 10 $50 calls on November. Palantir with earnings on November 4th. Why would you do that? Stock is 104 PE. Wrong multiple to look at Palantir. Wrong multiple. I'm willing to sell 50K. Where to put the cash? You're worried about where to put the cash. I would not do that. I would not do that. In 20s and always want to pick up beta. Seems risky with markets now. I guess I'm not following. You sold the 50 calls when it was in the 20s, or you just sold. Well, either way, I wouldn't have done that. Palantir, you can't look at their PE and judge them on their PE. Most of these types of stocks either will have negative earnings or very low earnings. So if you want an assessment of Palantir, well, I wouldn't say it's that bad. But if you want an assessment of Palantir, add two things together. Look at its revenue growth rate, multiply it by 2. So let's say it has a growth rate of 20%, multiply it by 2. Then add to that its operating margin. So if it has an operating margin of, I don't know, 30%, let's say, add that to twice its growth rate. The higher that number, the less likely you should be to short that thing, right? It's a sort of an adaptation of the rule of 40, which weights growth at twice the level that you'd weight the operating margin. It is common for these companies to have very low profitability, in fact, negative profitability, simply because of the amount they spend on customer acquisition. So redo it. And the higher that number, the less likely you should be doing that. Could you please remind us of the Trump trades? Well, the Trump trades are based on what he says. What he says and what he'll actually do are two very different things. Tariffs. He loves tariffs. Loves tariffs. But he's going to find out very quickly that, you can't simply just use that wholesale. Now, he has walked that back. He didn't say, I'm going to put tariffs on everything. He says, I'm going to use tariffs as a negotiating tool. Well, that's very different. I can either have a hammer in my hand and tell you, you're going to do something. And when you see the hammer, you might think this is a serious guy, but I may be unwilling to actually use the hammer. But still, I'm not going to tell you I'm unwilling to use the hammer. I want you to believe full well that I will use this hammer on your head if you don't do what I say. I don't think it's a good idea to use tariffs. I think it's a good idea to use tariffs on countries that want one-way trade. In other words, we can sell into your markets, but you can't sell into ours. That is done by more progressive governments that say, well, you're behind in global trade. You need some protection for a while. We get that. We would like access to your labor to have things done, but we get that you have to protect your market, sure. And it's not done from a winner-take-all mentality. Trump has a winner-take-all mentality, and not just a winner-take-all mentality, a winner-take-all, and you must lose. It's not enough for him to win. You must lose, which means you have to end up in a worse situation before you even began. It's not enough for you to lose the game and go away. You must be injured when you lose the game, right? That's the way he plays. That's his mentality is like, if you win anything, it means I lost. I must win. But if you haven't lost something, I haven't won enough. You must be injured. You must be damaged when you walk away from me. Maybe you want that. What I think is the likely outcome is a weak peso for a period of time. I think higher yields for a period of time. I think a stronger market for a period of time until we actually see whether or not any of these things will be done. Harris would be the other way around for a period of time until we see what won't be done. But leading into the election, I don't know that I'd be a hero on the peso. I'm long the peso, but I'm in no ways being a hero on it. I will wait, because if it looks like Trump is going to win, the pesos could see 20.5, 21, 22. Well, I'd rather be a hero at 22 than a hero at 19.5. So I will wait on the peso. Yields. I don't know that there's much he's going to do. I think it will be a fight on yields, because there's a belief that he's going to massively increase the debt with all these tax cuts. But he's the only one, other than Argentina, Milei and Argentina, he's the only one I hear talking about the sheer waste of government spending. He's the only one I hear talking about it. Even in Canada, with the Conservatives here, they're not promising balanced budgets. They're promising a move towards balanced budget, but not balanced budgets. And they're certainly not talking about the wastefulness of spending. They're not touching that at all, but he is. And he's crazy enough to put Elon Musk in charge of that and say, just cut shit. And Musk will. He will. Which I think would be such a welcome thing. That thing, I'd say, for that reason alone, I'd vote for that guy if he's serious. If he's serious about cutting this ridiculous spending, I would take that. He had a proxy on Bloomberg the next day who was able to say it a lot more eloquently. And he says, what you have are some government contracts with suppliers that have been in place for 60 years. For 60 years, you telling me that you're getting the best price out of that one? For 60 years, it's been the same supplier. And then he made a really valid point. He says, the most you're going to make in government is $183,000. That's the top salary you get paid in government, in public service. Powell, head of the Fed, makes $183,000. You kind of wonder, why would you do that, right? $183,000. Sorry about all that. He says, so what happens is these people will hang out there for 3, 4, 5 years, and they send contracts out to the same group of people, and then they go and they take a job with those people as lobbyists for hundreds of thousands a year. That's the game. That's the game. And that's why everything costs so much in Washington. That's why your money is being spent ridiculously. If he's serious about that shit, yields would go down. The bond market would rally if he starts cutting out that kind of stuff and you move to a balanced budget really quickly. So I think if he does what he says he wants to do, I vote for him. But can he get done what he wants to do? Or is he just promising a whole bunch of shit to a whole bunch of people and he has no intention of following through on any of it because it's all about Trump. It's not about America, which if you told me that, I would say, oh, it fits. It fits. That's who he is. It fits. I don't know. I see less and less reason to vote for Harris. She got her ass handed to her on Fox. Why she agreed to do that is the dumbest thing. She's not Trump. She's not Trump. You know, she doesn't want to say that anybody was wrong. Everybody was right. And you know, like you can't do that. You got to separate yourself from Biden. And she just wouldn't. Trump went on an interview with Bloomberg and he handled it. When I was listening, I thought, okay, this is the most rational I've heard him, even though, you know, he said some things that you think, you know, why? But it was the most rational I heard him. It made sense, and he got lots of applause. And then his proxies the next day on Bloomberg really brought it home, and I thought, okay, this, if you keep talking about this, you got something here. So the Trump trade is either what's right in front of your face, or if you think about it, you know, something longer term. I don't think he's going to get done half of what he promised. But if he can get done half of what he promised, I think it's positive. He does want to stay in the Fed, and he does want lower rates. I don't know if he's going to be able to get that done, but you know, everything. Well, you put tariffs on, you get lower rates. It's going to be massively inflationary. We've long left monetary theory behind, or the monetary theory of prices behind. Much as we've abdicated Keynes's theories, we've sort of just left them behind. Inflation is not controlled by the Fed any longer. Inflation is controlled by the pace of technology and the level of supply. The more jobs you add, then the more supply the economy is creating. Because why would a company hire someone if they can't produce more than you pay them? If they can't produce more in output than you pay them, why would you hire them? So we know that supply is increasing all the time. We know that technology is moving forward all the time. That's deflationary. Interest rates just, I think it's a group of people sitting in a room pretending that they can control something they think they can design. I don't think it does much. If you take the Fed out of the picture, I believe the lower inflation that we've been seeing over the last year is because of the increase in supply that we've been seeing, and supply channels, fixing themselves. The massive inflation we had wasn't because of all the money printing. It was because you couldn't get anything anywhere. It wasn't the money printing, because you've had money printing since 2008, go all the way through the teens. Where was inflation? Deflation seemed to be the big concern. Where was inflation? And look at what's going on in the world right now. In Canada, month over month, deflation, a couple of months now. If you look at month over month in a number of places around the world, you're seeing negative signs on inflation. That's deflation. It is not a monetary. It may have been a monetary phenomena in a more less integrated world, in a less technologically driven world, but not today. If you're looking for the true central bank, it's the bits and bytes. It's the tech companies. It is the pace of technological change. That's where monetary policy will be. You want lower inflation, increase the pace of technology. You want higher inflation, decrease the pace of technology, right? 30-year bond has higher duration than 10-year. Yep. My 30-year bond with high duration responded less to recent drop. As far as volatility is concerned, the longer out in the curve you go, the less volatile it's going to get in terms of yield. More volatile in terms of price because it has higher duration, but less volatile in terms of yield. So a 100 basis point drop on the 10-year might be met with a 60 basis point drop in the 30-year, right? Is it correct to estimate TLT price increase to 25 basis points in interest rate? Yeah, okay, so you're multiplying it by duration, but if you're saying that that 25 basis point drop is the Fed funds rate, you're saying that you're going to get a parallel drop in the curve by saying if you drop the Fed funds rate 25, everything will drop 25. That's not always true. I shouldn't say it's not always true. It's rarely true. You might get 10 basis point drop or 12 basis point drop in the 10-year and an 8 basis point drop in the 30-year. You know. But if you think that the 20 to 30-year segment will drop 25 basis points, TLT should increase by its duration, 16.4%, for a 100 basis point drop. Yes. My estimate is that we'll get somewhere around 80 to 90 basis point drop in the 30-year by the mid of 2025. That's sort of my thinking. How come you prefer gold over crypto? Because crypto's for douchebags and losers, right? And which crypto? You can't make gold, but you can make crypto. And don't tell me it's a limited supply, because there is an unlimited number of limited supplies. Whose crypto? Which crypto? Which criminal organization do you want to align yourself with? Which group of douchebags do you want to hang out with? No. I'll take gold, thank you. Do you also think the world is rapidly changing in all aspects? Well, that is the constant of the world. Is if you look at history, the one constant we have is change. Human life is becoming increasingly tech-driven. Human life is becoming increasingly tech-driven. No, human life is still biologically driven. I think if you're talking about the human experience, when you say life is increasingly tech immersive, sure. I don't know that I'm being tech driven. Smartphones, right? So these are all productivity tools, which allows us to live a more rich life if we want to, because we're not spending a lot of time doing mundane things. The other way of looking at this is by robbing us of the task of doing these things, you are robbing us of the richness of life. That life is the journey, not the destination, and technology brings you to the destination, so that you don't enjoy the journey as much. Okay, if that's where you're going with that, yeah, I can see that. But check your generation, right? So for somebody who grows up in that's a perfectly normal thing. I grew up at the time of the rise of video games. Well, video games are ruining everything. They're ruining kids' minds. They're creating criminals. All of these games, that never happened. And when I look back on things, I think it was perfectly normal and natural, and that the viewpoints I had about life were probably in some part informed by the culture that you grew up in, so that the possibilities of my life probably were greater simply because I had more technology that I grew up with. Maybe the generation that's growing up with all of this technology today will, as they say, stand on the shoulders of giants and then bring humanity even further into some future. These are more philosophical debates. The large scale of migration of people across countries. We've had migration for all of human history is transforming cultures. It's always transformed cultures, economies, and ways of thinking. So what you're saying is that I've looked back through history and I've noticed that what is going on today is the same thing that's been going on for all of history. Yeah, there have been mass migrations all through history. Crossing the ice shield, from Siberia into North America, huge migration into North America. Of course, cultures and economies transform all the time. We have a very different Canadian culture today than the one I grew up in. Very different today. But from day to day to day, you don't see these small changes. But if I think back, I think, well, I remember when this was the case, and there's always that nostalgia of it's a simpler time. But in the time, it wasn't a simple time. It was, another generation above you saying that 30 years ago was a simpler time. And those people were saying it was a simpler time. And in the year 1100, you had a grandfather lamenting the use of the windmill, going, "Why, in my day, we stamped the grain ourselves with our feet, and it made us better for it. Now you just have a horse going around. What's this world coming to?" you know, I think that's it's just been the way of the world. These shifts will have significant impact on both macro and micro economies, as well as human psychology. Might be a good topic for a seminar. Yeah, it's a great topic for debate in terms of what all that means. But let's not run into the trap of thinking that this is unique to human history. This is the story of history. This is what makes humans rather unique, is that you can watch a pride of lions over generations and generations and generations, and they'll be doing the same thing. The same thing. They would not have progressed as a pride of lions, but humans do progress, and they do change, and it's not linear. We cannot say that the views and ideas we hold today are significantly more are higher on an evolutionary scale than 300 years ago. You can only say, for the context that we're in, this makes sense. It is adaptable to the context that we are in. Not better or worse, but just adapted to the context. That people 300 years ago were good people. They weren't evil. 1,000 years ago, they weren't evil people. They were good people. They just lived in a different world where things were done differently, but they weren't done with any more hatred or anger than shit in the world is being done today by people who don't like the status quo or people who don't like a particular society. We have this, or the left has had this revisionist thinking that people 300 years ago were also evil. They were not. They were good mothers, the good fathers, good husbands, good wives, good children. There were good people in the world, and there were some bad people in the world, but there were good people in the world doing the best they could, that pushed their society forward as best they could. Then the next generation pushed it forward. So when you look back 300 years, if you want to have a litmus test, ask, were people pushing society forward? And if they were, then they're good people. Just because they were way back. I mean, I think lefties today would be standing at the finish line calling everyone who hasn't finished an absolute loser, and what the hell are they doing, and how dare they? These are simple-minded people, so we have to pity them, I think. Why are you looking to sell puts on TLT that don't expire till January 26? I'm not doing that. But I didn't do that. Wouldn't selling with a DT between 1 and 2 months generate a better annualized return? Yeah, but I didn't do that. I don't know where you're getting January 2026 from. I got a synthetic for January 2026, and a synthetic you match. You want the call, but you sell the put to finance the call. I got a synthetic, but I didn't sell puts in January. That's going out way too far. Still positive on holding gold? Yes, I am. You were interrupted by your mobile phone while answering my question. Oh, you mean the dinging? Question. Never got A's in exam, never cleared any. I did answer this. You're always a C student. I did answer this. I went on for about 5 minutes about this. If your goal in university was to just get by, well, congratulations. You just got by. Now you get to spend the rest of your life just getting by. You've developed a habit of just getting by. So if you want things to change, you must change. You must say, I no longer want to get by. I want to exceed. What are you going to do to change the way you do things such that you exceed? I say this to when I was a professor. I said this to my students on day one of every course. You may get this credit by doing the least amount of work possible and just getting by. You might just squeak through. In fact, you might just squeak through university altogether. But if your goal is to just get by, I've got some good news for you. You will get to spend the rest of your life just getting by. So you got by with a C. There's nothing about CFA that says suddenly you're going to do a lot better, right? Because this is the habit that you formed. This is the habit that you formed. You must first break your habit and become a different person. You got to raise your game. And if your goal, but I don't want to do that. I just want to hack my way through life. Well, then get a basement apartment and a bus pass and you're done. But girls don't date guys that live in basement apartments with bus passes. So prepare to be an incel as well. Yeah, I know that's harsh, but listen, man, I think you already know the answer to this. You're saying, look, I kind of just got by, I always feel it will be the same thing. I will never make it. Yeah, well, then what you have gotten to is what psychologists call learned helplessness. Is that you think, what's the point of even trying? It's never going to work anyways. And then you will continue to just get by, reinforcing your belief that why should I try anything? It's never going to work. I'm just going to get by, which reinforces and you have this learned helplessness. You have to break with the past. You have to become the person you want to be or be the person you are. It's your choice. It's your decision. But, it's a wasted life if you don't rise to the occasion, because there is only one of these. There's only one tour of duty, and that's it. There's no great Valhalla or heaven with thousands of years of life ahead of you where you live on a street in a house with clothes and you go shopping or whatever. I mean, I've heard some people describe what the afterlife is, and I think, how do you have so much detail? Are you dressed? Do you have clothes? Are you still a human body? Do you see your friends? Do you sleep at night? Do you eat? Oh, yeah. Oh, yeah. Give me a break, man. So, yeah, what do you want to be in this life? All right, what do you want to be? Waste production would continue to rise in the future due to increases in consumption and rising population in many countries. The U.S. is the largest waste producer in the world. Therefore, would waste management stocks such as WM or RSG be potentially good investments? I don't know. People live in houses. People have to continue to live in houses. I have a house. Is that a good investment? I don't know. What price? To say, is it a good investment? You must tell me at what price, at what valuation. At 183 times earnings? No. At 5 times earnings? Well, let's have a look at it. So it's everything is a good investment at the right price. Tesla's a great investment at the right price. Right now, it's a terrible investment. The market is competitive. It doesn't really give you too many options to get a great investment, right? So is it a good investment? At what valuation? And, thinking about it sort of a little bit differently, if you see that waste is going to increase into the future, what a great space for opportunity for entrepreneurship and innovation. So maybe they aren't great companies if they don't have a level of innovation where they're dealing with waste in a different way. If they're just taking waste from this spot and moving waste to this spot, that's a transportation company, right? That just transports waste. Are they actually managing the waste, or are they just transporting the waste? I'd have a whole bunch of questions before I jump in on those. Are they doing anything to reduce the level of waste once they take it from you? Are they repurposing the waste? Are they creating anything else that has a compelling marketplace? Why did TLT rise even though yields on the long end were almost unchanged? It didn't rise by much. You could say that it was basically It was basically unchanged. Now, keep in mind that the yields that we see are what are called constant maturity yields. In other words, when you look at the 30-year yield, it is the yield on a bond that if it were issued today as a 30-year yield, it would have that. TLT doesn't necessarily have constant maturity bonds. As time progresses, those bonds, no matter how little, no matter how many little pennies on the whole portfolio, will walk their way towards par, right? Every day that goes by is more accrued interest in the portfolio because it earns interest. So there's the accrued interest component, and there's the amortization of par every single day. The amortization is really, really small because we're this far out, but these are not constant maturity bonds that it holds. They're moving targets. They're moving targets that generate accrued interest every day. So TLT will move, even if yields do not move, it will move ever so slightly to account for the buildup of accrued interest in its portfolio. In relation to the bull put and bear call, when you see income traders footprint in open interest and volatility small, how do you know that you're seeing that? Wouldn't it not be better to just short a put where income trader, why? To avail of the higher implied vol, but why? I mean, just to make a move because somebody else is making another move, I would want to know, well, I wouldn't even care about that. What's the underlying doing? What is my belief on the underlying? I don't care what other people are doing. And in the end, how do you know what they're doing, right? You may see a large volume somewhere, but how do you know? How do you know what's going on? You don't. You're just sort of guessing. And what's the point of selling volatility on a call on a very bullish stock? You're going to get steamrolled. I would not mess around with that stuff. Not as a retail trader. I wouldn't mess around with that stuff. Doesn't why question imply understanding, which can be some of the most difficult questions to answer? Might be an unfair question for him, but I suppose we can be curious if he'll answer. Oh, I think you're responding. Your comment was directed to somebody else who asked me why on something. Okay. Would like to know your thoughts on solar stocks. I have no thoughts on solar stocks right now, but it's like anything, if you're late, you have to be early to a theme. You have to be where nobody wants to be and nobody's talking about anything. What do you think about NVIDIA? I think it's priced. It's priced in. Its growth is priced in. Doesn't mean it can't go higher, but you're paying for it. What do you think about this hot topic or this hot topic? I think it's all priced in. I think everyone's talking about it and the price is in. You have to say, what do you think about this? I don't know. No one's really talking about it. Oh, well, what's there then? What's your thesis? Well, you got to be where other people would look at you and say, why would you do that now? This and this and this and this is going on. Right. All of this is going on and there's the price. So if you know it, then everyone knows it. If you can tell me all these things that are going on, it's not a big secret. They're already going on, which means it's already in that price. Thank you. Thank you. It's already there. I'll take it. I disagree with much of that. And because all of that is known, it's not yet to be known. It's all known. The price is what the price is. I'll take it. Just looking at where we are on the market. You can't tell anything anymore. I don't even know why I look. Thought about Mark today when I was in church. Wrong place to think about me. Part of today's gospel is not about taking the easy road, which reminded me of his Confucius quote about the hills and mountains on his website. Confucius, I don't think I should type. Oh, okay. When you say you're buying TLT because rates are coming down, why use longer duration rather than DV01 equivalent in short rates? Because short rates have no duration. You're going to get no price change on a short rate. You're saying, well, rates are coming down. I'm going to buy the 3-month. It's not going to do anything to the 3-month at all because it has no duration. Has no duration means it has no sensitivity. Duration is not a measure of time. Duration is a sensitivity. When I say something has a duration of 10, it means it will move 10% for a 1% change in interest rates. T-bills have no duration, 0, which means it will move 0% for a change in interest rates, 0%. You're not going to get anything other than the interest rate implied in the T-bill. So there'd be no point. In terms of macro research, are you mainly just looking at economic data and coming to your own conclusions? Yep. Or do you read any articles, research reports? I read the news. It's interesting sometimes to get a different look on something where somebody says something, you think, okay, well, I didn't consider that. Does that change things for me? Is there a way to construct a trade to profit from the elevated IV going into the election in the US? You would have to find something that would be true regardless of who won. So company ABC would go up if Trump won. Company ABC would go up if Harris won. Well, now we have something, because no matter who wins, you have a belief that this thing will go up. In other words, you're president neutral. You don't care who'll be president. You've hedged that out by being president neutral on your trade. But you can hedge out IV on one thing that is Trump, that is a Trump trade, and Harris could win. Well, then you're screwed. Or you did something based on Harris winning and Trump won. Well, then you could be screwed. So sure, but you'd want to find something that would be true regardless of who won. What is true regardless of who wins is rates are coming down. AI is increasing. Utilities will win no matter what. They'll win no matter what. So any pullback in utilities, I would sell puts on easily. Copper, same thing. Curious if you seen the recent Michael Saylor. I don't listen to that guy on Microsoft. What would be the point? Let me guess. He's bullish Bitcoin and he thinks it's going higher. Am I right? Am I in the neighborhood? And he has some reason why it's going higher. Am I right? Similar to your Tesla short. What's the point in shorting a cult? Exactly. I agree. It is a cult. It's a cult stock. It's not, if you take out Bitcoin, it is an unprofitable company. It is a value destroying business that he's running. It's just the Bitcoin thing. He is one of I think MicroStrategy is the largest holder of Bitcoin, largest single holder of Bitcoin. But I imagine in his interview, he was bullish Bitcoin and he had some reason why he was bullish Bitcoin. I think that's the TLDR on that one. Too long, didn't listen, didn't read, right? I think that's what that was. From your Beyond short, is there anything you think might apply in timing shorts? Not really. Do you think eventually brought the valuation? What do you think brought it down? Fundamentals always show up. They always show up. And it gets to the point where it becomes hard to ignore the fundamentals. They always show up. You can hype as much as you want. You can print headline after headline after headline that's misleading as long as you want. That was beyond me. Misleading headline after misleading headline after misleading headline while the insiders were dumping shares. I don't know why the market didn't respond sooner. But again, they play what's right in front of their face and that's it. They won't see past it. That one was an easy one. That one was just easy. MicroStrategy is a little bit different. Same with Tesla. It's a little bit different because Beyond Meat didn't have the cult of the CEO or the cult of like crypto is just, it's a cult following. You either believe it or you don't. You have to just believe it. It's not as if you can break it down and say, well, here's the reason why. It's just all the reasons why are all based on faith and belief. Yet, if here's the interesting thing, And I think it's just a big screaming warning sign on all crypto. When it comes to smartphones, of all the smartphones in the world, do you think uh, that it's like 80% male and 20% female? Of all the smartphones in the world, if there's a billion smartphones in the world, 80% of them are held by guys, 20% by women, or would you say, well, it's 50-50? Probably 50-50, right? What about Netflix? Would you say of all the subscribers in the world, it's predominantly men or predominantly women? I think you'd say probably 50-50. What about email? Is it predominantly men that use email, or is it predominantly women? I think, again, you'd say 50-50. All general purpose technologies will be about 50-50. Crypto is pretty much 100% men. Pretty much 100% men. Why? Why? Right? I mean, that to me is a clear sign that this is not a general purpose technology with a general purpose solution that makes it something that I'd want to buy. It's predominantly men. It's predominantly men. Almost all men. Go to a crypto conference. Go to a crypto conference, right? And you'll see what I mean. There's no happy hour there. You know, if there is a girl there, it's she's not pretty. She's crypto conference pretty. Can't believe I said that, but yeah, you know what I'm saying. You know what I'm saying. It's like a rare thing. It's a rare sighting. Hey, did you see the girl here? If there is a girl who is into crypto, ask her why she's into crypto, and I guarantee you she'll say, "Well, my last boyfriend got me in." It's almost all men. Almost all men. Have you explored the hedge fund marketplace and interactive brokers? No. Have you looked at platforms like Masterworks? No. Do you have a rule of thumb when an option spread is too wide to trade? If you have, you can look at the volume. If you have, you know, 75, 100 on any given day at some strikes, you can get in and out. If you really want to get in, maybe not out, but if you really want to get in. But if you're looking at, a 40-cent spread and you see no volume anywhere, it's not worth it. Once you start getting to 50-cent spreads, 60-cent spreads, there's nothing there. Why even have the option? Have you ever felt less worthy or bad of not going to top Ivy League college? Are you insulting me? I always have that feeling, and I always compare myself to them or others and feel less in knowledge, less in everything. Well, you have the wrong, as they would say in finance, you have the wrong benchmark, right? Look, if you compare yourself to other people, it may motivate you to be better, but then you'll just compare yourself to the next person in line. And then that might motivate you to be better, but then you'll just compare yourself to the next person in line. At some point, you'll become discouraged because no matter what room you enter, there'll be a bigger fish. You buy a boat, you're on the water, another bigger boat will come along anytime soon. You upgrade to a bigger boat, there'll be another bigger boat. You upgrade to that, you go to a marina, there'll be a bigger boat. There's always a bigger boat. There's always a bigger wallet. Always. There's always a better looking girl. Or a guy with a better looking girl. There's always. You'll never, ever, ever say, I'm at the top. I'm at the top. You'll never be there. You'll go to the beach. There'll always be guys with better bodies than you. There'll be guys with better cars than you, guys with better jobs than you. They're all, no matter where you go, that will always be true. Always be true. You will beat yourself up comparing yourself to other people. You got the wrong benchmark. Your benchmark is you today. What are you going to do such that you beat your benchmark tomorrow? That's it. And you just got to beat it by a little bit, which means you need an active position. An active position means you've done something different that made you better than your benchmark being you today. What are you going to do in the next 24 hours where you say, I beat my benchmark? And then that becomes your new benchmark. And what are you going to do in the next 24 hours to beat your benchmark again? The only person you're in competition with is yourself, because you can win every day. You can win every day because you have it within you to be better than you were the day before. Better could mean I learned a new word I never used before. My vocabulary is one word bigger. I learned about a company I never knew anything about before. I learned about a sector I didn't know anything about before. I learned a calculation or a formula I didn't know anything about before. I could only do 16 push-ups today before I failed. Today I did 17. I walked 1,000 steps yesterday. Today I walked 1,100 and I watched 15 minutes less of TV. Every day you beat your benchmark. Every day you get closer and closer and closer to who you truly are inside. But when you compare yourself against other people, it'll just make you bitter. And you will then start to embrace ideologies like, yeah, tax the rich, tax the fuck out of them. How dare they? Because you yourself have already concluded that will never be you. So if it'll never be me, treat them badly, because it'll never be me. I'll never be treated that way. So who cares? You start to adopt those types of ideologies. You're only in competition with yourself. Your only benchmark is you right now, and you have 24 hours to beat your benchmark. Are you willing to take up that contest? Right? And then do it every day. Period. That's it. Because I'm telling you right now, there'll be a bigger boat. There'll be a faster car. There'll be a bigger wallet. There'll be bigger biceps. There'll be a better looking guy. There'll be a better dressed guy. No matter where you go. No matter where you go. Unless you hang out in one place, as you get better and better and you hang out with the same crowd and you become this really big fish in this tiny little pond, what's the point of that? You grow to the size of your environment, which means as you grow as a fish, you're going to be swimming in bigger ponds. There's always a bigger fish. There'll always be a bigger fish. So get past that. Abu Dhabi becomes the wealthiest city in the world, 1.7 trillion. That's pretty insane considering it's controlled by one family. Okay. Do higher education degrees really lead to better jobs and higher salaries? Yep. Or is it merely a way to get an interview? Well, you can go to the doctor, you can go to the hospital and say, I want to be chief of surgery. Where'd you go to school? I didn't. I mean, that's just a way to get the interview, right? Not really. Not really. There is a very tight correlation between income and education. There is a very tight correlation between unemployment and education. Look at the last jobs report and go from high school, less than high school, some college, and look at the unemployment rate as you move up in education. The unemployment rate drops. You make more money and you spend less time unemployed. A very tight correlation, very tight. There are no high school dropouts in my neighborhood. In the community I live in Costa Rica, they're all significant houses. There are no high school dropouts. Well, I shouldn't say that. There might be a drug lord or two hanging out in there, or a high-ranking official in one of the crime families. I don't know, maybe, but it correlates. Wealth and income correlates very highly with educational achievement. Very highly. It does not mean that you need an education to be wealthy, and it does not mean if you have an education, you'll be wealthy. We're talking statistical here, not, so we have probabilistic outcomes, not deterministic outcomes. The probabilities are the more education you have, the higher your income and wealth levels will be in life. The probabilities are. But there are still uneducated people who are very wealthy and successful, and there are very educated people who might be living on the street. We know a lot of them work at Starbucks because they chose the wrong degrees. If you really want to have a deep conversation about liberal arts or political science, head over to Starbucks. A lot of them are employed there. That's Starbucks recruits on liberal college campuses. You have a degree in gender studies? Barista just might be for you because let's face it, your degree is useless for anything else. CPI reading comes in every month, up and down. Yeah, well, I wouldn't say that, but what you're saying is that there is an element of randomness to a direction. I would agree. Why would it affect such long-term expectation of inflation like 5 year? Because we have a market that is this responding to every single data point without looking past it. They respond to every single data point, every single data point. You know, you could have a stock that's going down, 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 and then has a little rally. Oh my God, it's going to rally. No. It just, that's short covering, and nothing ever just goes in a straight line. It tends to do this. But the market these days, you get coming down, and then it does a little bit of, oh my God, everything's going to change. Inflation is here. It's coming back up. Stagflation. And then off it goes, and the narrative just keeps going. And the news media, the business news media, doesn't help it. They start having people on, the Fed made a mistake. Did they cut too early? What would you say? Oh, yes, I think they cut too early. I think they're going to have to. And that narrative keeps going and on and on and on. And meanwhile, it was nothing. It was a blip. It was a blip. Have a look around the world at everything else. Have a look at the import-export prices out of the U.S. this week. All negative, all negative. Have a look at where inflation is. It's in places where you're not going to destroy demand with higher interest rates. So yeah, there is a random element to all social systems. There are underlying trends, but around the trend, there's randomness around all trends. The market is responding to all of this randomness as if it's information. And I think it's wrong. And I made a big bet on thinking it's wrong. We'll see what happens. I'll either be very wealthy if I'm wrong, or even more wealthy if I'm right. I could lose, and it really wouldn't matter that much. So maybe it's easier for me to make these bigger bets because I have the ability to continue to hold. This is a beautiful thing about duration is I can't be wrong. I simply can't be wrong because all bonds will mature at their face value. So I'll always get the yield. If I'm wrong on TLT, what do I get? I get a huge immediate loss of which I get out, and I get into zero coupon bonds with higher duration. I don't lose. I never lose on this one. I won't. I'm not going to lose on this one. This one to me is a slam dunk. So I disagree with the market, and we'll see. We'll see. Right now, I'm wrong. If we had to say, well, you need a report card right now. How are you doing? Where's ZB? ZB is down 0.23, but you can't tell much from the night. So there's being wrong in the moment, and there's being wrong in the future. I believe I'll be right in the future. I'm not too concerned. But the overreaction to every data point opens up opportunities, and it has opened up an incredible opportunity, I think, on TLT. Ivy Leagues have a certain kind of ego, like they feel they are some superior human being since they have done their education from certain school. Do you think I'm just jealous? Yeah. Or the person you're talking to is an asshole. There are some people who want to remind you every single time, how good they're doing in life. That's an asshole. That's somebody who is insecure, so they lead with that. There are certain things that if you are of a certain type, you don't need to mention it. I don't start every conversation with "I'm a PhD." What's the point? Like, why would I do that other than to make somebody else feel, I'm trying to, exert my superiority. That seems more like a problem with me. I don't know. I think it might be, you're feeling sort of threatened or challenged by their success. Why do these Ivy Leagues are so successful? Is it because they have good networks? Yeah, a lot of it is who you know. Plus the level of excellence you need to get in to begin with. Manager discussed the interconnections between the repo and federal funds market. Oh, underscoring the importance of monitoring a range of indicators to assess. Looking at a range of such things, the manager concluded the reverse appeared to remain abundant. Oh, the manager discussed the interconnections between the repo and federal funds market, underscoring the importance of monitoring a range of indicators to assess reserve conditions in the state of money markets. Looking at a range of such indicators, the manager concluded that reserves appeared to remain abundant. What does it mean by this statement? I don't know. Where'd you get the statement from? Well, it's not saying anything. It's saying they're looking at these things and saying reserves appear to remain abundant. For reserves to remain abundant, what we would be looking for is no stress in the repo market. So if the repo market is well behaved and in line with wherever the Fed funds rate, if the repo market is within that range because they are secured, it is a secured form of lending, then reserves are ample. I imagine that's what he means by that statement, but I don't know that I have enough of the statement to make that conclusion. Do you listen to any podcasts? Joe Rogan, Lex Friedman. I've listened to Joe Rogan before. I don't have a lot of time to listen to 3-hour podcasts, though. Lex Friedman, I have listened to him. He's thoughtful. It depends. I don't listen to Joe Rogan. I listen to the guest. What guest are you having on? And is it somebody that I want to hear from? Other than that, I don't tune in and go, Joe Rogan, Lex Friedman. It's who they're interviewing. As what the Meldrum's video on big tech breakouts. Would love to hear your thoughts and analysis. I haven't watched it. Will you create a video on this and the future impact of those breakouts? I don't know that I would. I thought you were in Costa Rica. No, I'm in Canada. I was in Costa Rica. I'm back in Canada now. What's your advice for people in their mid-20s, working an entry-level job, average salary at best, and just going through the motions? Well, then, spend some time with yourself and ask yourself, what do you want? What do you want in life? First of all, have some plan. What do you want in life? And then start working towards that. But if you're just going through the motions every day, what you don't want to do is wake up 10 years from now having gone through the motions saying, I missed the gun. I'm way behind. What do you want? And get it. Ask for it. Stand up. Show that you're worthy. Don't expect life to travel through your living room, and don't expect people to walk up to you and hand you just what you need unless they know what you want. And then you have to earn it. Earn it. Not have this sense of entitlement that I'm deserved this. I've been here 6 months and I'm not the CEO. Oh God, what an oppressive workplace. You got to earn that shit, man. You got to earn that shit. But I'm a victim. That ship has sailed. If you didn't play your victim cards over the last 3 or 4 years, that ship has sailed. That ship has sailed. Do you trust the employment inflation reports? Well, when you say trust, what part of trust do you mean? Do I trust that they're not manipulated? Yeah. I trust that they are saying exactly what they're attempting to measure. Do I trust the measurement process? I don't know about that. I think that for employment, it's not capturing a lot. I just don't know how you would change it, but it's not capturing a lot. And the inflation reports don't measure anybody's cost of living. They measure a basket of goods and the change in the price of a basket of goods over time, whether you buy it or not. So beef, 20% inflation year over year. Yeah, but what if no one's buying it anymore? Like, what if no one bought the very thing you're measuring and they switch to something else? CPI doesn't catch that, but PCE does catch that because PCE captures what's in the GDP basket, not what's in some hypothetical basket. So PCE is the better measure. Yeah. So, but for the most part, they're all flawed scales. But if you use the same flawed scales again and again, you'll catch the trend. You may not catch the accurate measure of something, but you'll catch the change in something. What's the probability of reports being engineered? I would say zero. Pursuing an, if I want to thank you for sharing your whole derivatives videos. Oh, great. How do you think the Tesla thing turned out? Robotaxi robots and stuff people are saying they were remote controlled. Yeah, it didn't work out well. The price showed that, but certainly not enough. Certainly not enough. SpaceX, there's price insensitive customer being the government. Additionally, we don't know what the financials actually are with SpaceX. So while fascinating, no idea whether it's a good investment. How does overnight trading work? Does every broker allow trading after hours? No. How are prices affected after hours versus opening price? Well, news never stops, right? News never stops. If you look at price movement during the day and price movement from the close of business to the open of business, most of the moves come in those hours. It's just you don't actually get to experience it till the next day, which is why investors always say it's about time in the market, not timing the market. Because, if you're long, you could wake up one morning and the screen is just red. Well, you didn't really have much of a chance to do anything. Globex has always given more professionally inclined investors a chance to hedge out during the night, but Globex was primarily, not Forex. Forex is traded on its own platform, but was primarily futures contracts and options on futures to some degree. How do you do due diligence for pharma companies knowing their returns depend significantly on drug approval? Well, that's what you got to do. You have to assess market size and market potential. Is the drug they're developing for a growing market? I wouldn't worry too much about understanding a lot of the biology of the drug. That's what the researchers and the companies are doing. I would be looking at its commercial viability and the size of the market that it's entering. But I don't bother with that because I don't understand a lot of that stuff either. So I'm not a big fan of pharma companies or a big investor in pharma companies because I don't know that I really want to put that much effort into learning it. How much alpha do you generate? Beats the hell out of me. I don't, that would require me to generate a bunch of benchmarks for what I do and break down my returns into asset classes and base it, compare it to a particular benchmark to determine the alpha. Beats the hell out of me. I don't know. I don't bother with that. I'm not seeking investors or assets under management. I don't have to impress anybody. Looking at EQR residential, try to apply your lessons in applied series. EQR has WACC of 27%. What? 27%? Hard to see them taking on any projects with an IRR greater than 27%. Uh, 27%? Are you sure about that? That seems rather ridiculous. In some videos, you talk about withholdings, but I'm not familiar with that. Well, if you're a Canadian and you're holding a U.S. stock in a taxable account and that stock pays a dividend, the U.S. government withholds a percentage of that dividend. If it's a qualified dividend, I think it's 15%. If you're in a tax treaty nation, I think it's 15%. If not, it's 30%. So when a dividend is paid, because it's being paid to you outside the country, the U.S. government says, give us 25% of that dividend, or give us 30% of that dividend. He doesn't get it. That's a withholding tax. Bank of Canada, 50 or 25? Well, 25 is in the bag. 25 for sure. You get 50, you're going to get a great rally on utilities and REITs and banks. My base is 25. He's got permission to go 50. I just don't know if this guy's a 50 basis point guy after going 3 cuts in a row at 25. I think the more likely scenario, the greater probability would be on 25 with a very dovish press conference after, right? Because the market will take the rest of the rates down on their own. You don't have to do the 50. The market will do it for you. Be very dovish. Because that would be 100 basis points, and you still have one more meeting. You also have to be concerned about the level of the dollar. Now, the lower the dollar, the greater the attraction of exports, but we export raw materials which are denominated in US dollars anyways. So I don't know that it would help exports, but it might raise the price of imports, one of our biggest imports being gasoline, because we don't refine anything here. We got a lot of oil, we send it out, and we bring in gasoline. Going 50 would significantly weaken the Canadian dollar, which might be inflationary, because suddenly you got to start importing energy, which is based in US dollars at higher Canadian dollar prices. I seem to think 25 is the way to go with very dovish talk, and try to find a balance between supporting the economy and not messing up the dollar too much. What do you think about Google? OpenAI's chat. There seems to be a lack of trust that Google will compete in chat and search at a forward P of 19. Do you think it's a value investment in this market? Well, isn't the DOJ wanting to break Google up? And also for Google this for Chat GPT and for all of the LLMs, this is quite damaging. Let's see if I can find it. Apple study. Google, it was published on AR capital XIV. The study published on a small r capital X small I small v. I guess that's supposed to spell archives, but in an interesting way. Apple study reveals critical flaws in AI's logical reasoning ability. So here's a quote. We found no evidence of formal reasoning in language models. Their behavior is better explained by sophisticated pattern matching. So fragile, in fact, that changing names can alter results by about 10%. So that's not good. One example given in the paper involves a simple math problem asking how many kiwis a person collected over several days. When irrelevant details about the size of some kiwis were introduced, models such as OpenAI's and Meta's Llama incorrectly adjusted the final total despite the extra information having no bearing on the solution. So if you can change your question setup a little bit and get a completely different answer, which is what they're saying, is that it says here, simply changing names can alter results. That all of these large language models are nowhere near where they need to be. I know when I'm on a site and I see a chat thing at the bottom, now powered by AI, it's like, what's the point? All you're going to do is direct me to your best guess of what I'm asking, and you're going to go make me read something else somewhere. I'm not actually talking to someone that can have formal reasoning. You're just going to say, oh, I see this word. I think you mean this. No, I don't. No, I don't. This stuff's not ready. It's not ready. So I don't know that I would buy or sell anything based on the fundamental truth of large language models being useful. On the psychological belief that they're going to change the world, then yeah, you got to start picking winners and losers in an imaginary competition. Much like the .com was picking winners and losers in an imaginary competition. Most of those sites were destined to fail anyways. Most of them, 95% of them went away, but you still had to pick a winner or loser if you were going to play. Favorite investors in the hedge fund space? I don't know. I don't really think about it. I'm not a fanboy. I don't follow particular people. I mean, I don't know that I have favorite investors. Why are majority of the developed countries determined on increasing taxes when they know it'll lead to an exodus of high net worth individuals? It's not that they're determined on increasing taxes. They're determined on increasing taxes on success, as opposed to finding a way to increase taxes. They seem to say, oh, you can't tax anybody else but successful people because they don't pay their fair share. The top 10% pay anywhere from 40 to 60%, depending on the country you're looking at. 40 to 60% of all the taxes. That's more than their fair share. That's 4 to 6 times their fair share. A consumption tax is a far better tax to have. If I have more money, it stands to reason I'm probably spending more. I would pay more in taxes. So what's wrong with a 20% consumption tax and a lower income tax, right? Then I can pick and choose what I spend money on, but it's fair. You bought a $20,000 car or $30,000 car, you paid 20%. I bought a $100,000 car, I paid 20%. I paid more in tax. That's progressive. Why? Because I spent more. But to continually go after the same group of successful people again and again and again and again and again, at some point you can't tax them anymore. And you've lost a huge tax base the more you punish these people. But we don't elect qualified people to government anymore. We elect popular people to government, and we cannot expect them to be intelligent. We cannot expect them to reason that way. They will say the popular thing. And because there are more people, under the 70% success line and fewer people above it, all you have to do is keep saying, I'm going to give you everything, and we're going to make those people pay for it. Those greedy people. Oh, you mean the person who built this business and gave me a job? You mean that person? Look, how many Bill Gates, Steve Jobs, Jeff Bezos can a country lose, right? What if Jeff Bezos said, you know what? US for Amazon, forget it. I'm going to go to the UK and start Amazon. How many jobs would that have been lost for the US? One successful guy, Steve Jobs. What if Apple were started somewhere else? What about Microsoft? What if Bill Gates started somewhere else? Be careful how you treat successful people. It is usually the case that successful people are some of the biggest job creators in the economy, that they're probably some of the largest contributors to economic growth and prosperity to the economy. How many of them can you afford to lose, right? How many? This ideology of they're not paying their fair share. They've got so much, I've got so little. They should lose some of what they have, I think is misguided, extremely misguided. But that is the trend right now, is in more advanced economies, is to say these people have it, these people don't. Let's tax these people who have it, as opposed to saying, why don't we just spend less, for Christ's sake? Do we really have to support everybody's lifestyle? You make a lifestyle choice, and I have to pay the bill for it. I don't agree with that. Canada sends big checks out to people who have kids, but isn't that your problem? Didn't you have the children? Why should I pay the government to subsidize your daycare? Isn't that a you problem? I don't have kids. I chose not to have kids. You had 6, and you say, oh, daycare is so expensive. But isn't that a you problem? Isn't that a lifestyle choice that you yourself chose? Why is the taxpayer responsible for your lifestyle choices? If I'm responsible for your lifestyle choices, I should have a say in how many children you can have. I think the taxpayer should have a say. That if we're going to pay for send checks to everybody with kids, nobody can have more than 2. We should have a say in how many children you have if we're expected to finance your lifestyle choices. If not, then finance my lifestyle choices. Do you know how much artwork costs? I'm collecting art. You know how much it costs? The taxpayer should subsidize me on this. The taxpayer should help pay for some of my art. Do you know how expensive it is? When I had a dog, it was 4 hours of walking a day. Well, I was less productive. The government should have dog walkers. The taxpayer should pay for somebody to walk my dog. See how ridiculous it can get when we start bringing our lifestyle into it and saying the taxpayer should finance my lifestyle choices. No, no. But you don't get elected by telling people to grow up, behave, be responsible for your own lifestyle choices. Your father raised you. If your father now needs long-term care, isn't that your responsibility? Why are you dumping it off on the taxpayer? Right? It's family. That's your responsibility. I'm sorry about your situation, but it's not my problem. It's not my fault. I already pay into a free healthcare system that I don't get any of. Right? How free is it for I think like something like 6-7 million Canadians pay a higher tax rate because of our so-called free healthcare, of which they don't get access to it because, well, you can't get a doctor, you can't get free healthcare, can't get a doctor because doctors aren't taking new patients. It's a broken system, and it all starts with democracy, which is broken in at least in Canada and the U.S. We have broken democracy. I've said that many times. I don't think you need to hear me rant about that again. Thoughts on buying the index, not following the markets? Passive, sure. If you're thinking about your time frame being 20, 30 years, I guarantee you'll be higher over time, and your average return over time, if you're not worried about the path that it's going to take, your average return over time will be above 10% on average, 100% equity, holding a broad-based market index, sure. What financial industry look like when people realize this is a viable strategy? Well, it'll be great for people like me who don't do that, because if everyone did that, you would have an extremely inefficient and irrational market, but also a market that would be almost impossible to short. Almost impossible to short. Would you advise reading books like Intelligent Investor? It's dated. It's old. Howard Marks, The Most Important Thing. Yeah. And all the books on investment philosophy. Not all the books. I mean, at some point, get out in the real world. These philosophies work in real life to a certain degree. There we go. That's what I needed. To a certain degree. AI will reshape the job market to the point where UBI will be unnecessary. Will be necessary? No. Do you think this is where we're headed? No. Just don't see how UBI will be implemented. No. This universal basic income. No. It's why would it be necessary? I don't. If you get to the point where AI is to the point where nobody has a job, then none of these companies will have any value. None of them, because who would spend the money? There would be a limit to how much you could do, because supply begets its own demand. So if you're not supplying labor with wages, where's your demand going to come from? You would have such a crime-ridden society that you'd have bigger problems than worrying about UBI. Much bigger problems. There is a tipping point on unemployment that when you get to, the society just crumbles. So I would not. I don't know what that means. Are you into luxury watches? I don't wear any jewelry at all. I'm not into anything like that. I don't see the point of it. I have a phone on me all the time. It's right there, right? It's 9:15. I just saw it right now. There we go. I don't need $50,000 on my wrist to tell me it's 9:15. And I'm not into the investment side of that at all. So no. Do you think they're worth it? I don't know. There is a market for it. So to determine whether it's worth it, you have to figure out where the market is. And I don't know where the market for that is. Explain why leverage ETFs consistently underperform over the long run is because they provide daily returns, not long-term returns. So up 5%, down 5%, up 5%, down 5%, up 5%, down 5%, up 5. You think, well, you end up right where you are, but take 100, drop it 5%, then increase it 5, then drop it 5, then increase it 5. It will slowly walk its way to zero because it's a daily return, not a compounded return. In Q&A, you said you were not trying to beat the benchmarks. Well, I don't have a benchmark. Why? Because I don't have a benchmark. I mean, you do all the work, you would want to beat the benchmark, then it will be worth it. What benchmark? You tell me what benchmark I should beat. Now, if you say what if I were a fighter and you said, well, what's your record? 300-0. Who'd you fight? A bunch of 5-year-olds. Would you say, oh, wow, come on. Come on. Obviously, you would say, well, that's the wrong benchmark. So what benchmark? What benchmark should I benchmark myself against when I'm investing? S&P 500? Okay, so currencies are out? Oh, no, you could do currencies, but there's no currencies in the S&P 500. So any return I get on currencies, I automatically beat the benchmark. All I have to do is buy SPY and make just $1 on currencies. I beat my benchmark. You would say, wow, not really, because there's no currency in the S&P. So not really. We got to look at what you did just with the S&P components. Okay, so I'm not allowed to go outside of my benchmark, but I do. How many benchmarks would I need? What benchmark would you benchmark me against when I'm all over the place? Currencies, futures, options, duration, beta. What benchmark would you use to judge my performance? It would be almost impossible to come up with a benchmark. The only one you can come up with is an absolute benchmark. Is that, well, you must get the 3-month rate plus 800 basis points, a high yield, whatever high yield is. Take the triple C spread and say you're just as risky as a triple C company. So your benchmark is the triple C OAS plus the cash rate. Cash rate's 5%, triple C is 8%, so 13% is my benchmark. It's agnostic to what I'm doing. It's just I must beat a high yield benchmark. Okay, fine, doing that without a problem. I'm doing that. Is that good enough? Or must it be the S&P 500, and why? Right? So when you pick a benchmark, when you say, are you beating the market? What if the market is not my benchmark? What if I'm a currency trader? Would you say to a currency trader, are you beating the S&P 500? What a silly thing to say, right? So let's to say beat the market, you got to be careful on that. 32. Can reliably make 15,000 from selling puts and covered calls per month. 1,500. Want to use the premium to buy 2 triple Q per month and keep a bit of cash. Anything better than triple Q to build long term? As long as, the thing is, it has got great upside, but it also has big drawdowns. So as long as you're willing to sit tight during the drawdowns, which could be sometimes 6 months, 9 months, a year, and it could be as much as 30, 35% on a bad sell-off. If you're comfortable seeing the value of your portfolio drop 35% before it starts to go up without it scaring you out, then that's fine. During the dot-com crash, triple Qs crashed 90%. And it took, I think, 16, 17 years just to break even. Are you comfortable with that kind of drawdown? If you are, then off you go. But it was dead money for 16 years. Are you comfortable with potentially a repeat of that if the AI bubble crashes? You could have a 50, maybe even 60% drawdown. If tech falls out of favor and AI goes away, or AI is seen as just, the promise of AI is just not going to happen, and all of that goes away, and you get a 50, 60% drawdown and 12 years to break even, are you comfortable with that? That is a reality, right? Can you know beforehand with enough experience when a crash is coming? Nope. What to look out for? These things are random and they come out of nowhere, and they can come from who knows what direction. You could be looking at a whole bunch of things, and then suddenly it comes from some direction you're not even paying attention to. And it's like, well, I didn't even know I had to be looking at that. That's the point of it. They're random. 1 year approved record would be enough to convince recruiters to get an entry level to finance if it's mixed with masters. If you're looking for entry level job, any of that is good. Yeah. How should we approach opportunity costs when you invest in the market? Should we think about it, or will it just overcomplicate? Well, there's always an opportunity cost, right? Is you could be in a 20-year bond at a 4.4% yield and locked in, and you're good, or you can go into the market, and you could end up with more, or you can end up with less, right? So there's always an opportunity cost, but then there's an opportunity cost of not doing anything. Saying, no, I'll sit in cash, thank you. And the market goes up 20%. It's like, well, that was an opportunity cost, right? So there's errors of omission and errors of commission. Errors of omission is not doing something you should have done, and an error of commission is doing something you shouldn't have done. Which one will it be? I don't know. Beats the hell. The future is unknowable. It is unknowable. It's not that it's unknown and we can discover it. It is unknowable. It's not even worth trying to figure out what the future is. It is unknowable. All you can do is say, this is the situation now. I think conditions will be like this, which means it should be beneficial to me, but I don't know. Something could happen tomorrow and all bets are off. I don't know. I'm looking at futures right now, and they're, where are we? What futures? S&P futures are up 725. Could wake up tomorrow and they're up 60 or down 200, or they could be right where they are now. I don't know. What do you think is going to happen? I don't know. Right? Canadian or US REIT you like? I like the Canadian apartment REITs, but only on pullbacks. In the US, is there a REIT that I like? US prices in everything so fast. Boston Properties, if I saw a scare in Boston Properties, we pull back to 75, 73, 72. Yeah, I'd probably be one in on that one. Do you Prologis, give me under 110, 105 on weakness. Yeah, I'd probably be interested in that. How should we already did that? Grandfathered in. Okay. Buy the applied level is the best investment I made. If someone does not have the capital, would you advise to take loans and trade? No. Are you ever going to do a part 3 about why you left Canada? I'm close to it. I'm working on something right now. I got to be careful, right? Because I still need the country to get a certain thing done. Once I'm done with that, then I'm free to name names, and I will name names and I will show video. I got video of people doing some nasty things, successful people and unsuccessful people just being little thieves. And I'm going to show it. I am going to show it. And then send them the video saying, I've made you famous. Here you go. Look at this. And I've even named your name. But I got to be careful because I got to make sure that there's nothing left that I need. So if it were Canada, I would have done it already. But this is a third world country and there is corruption, and you got to be careful how much you poke somebody in the chest because they know people who can make your life miserable, right? Which industries in the consumer sector would you consider to be dying and not touched with a 10-foot pole? Consumer sector, staples or discretionary? Something that is dying. I think years ago I said carpet. I think there's less and less need for carpet and less desire for carpet. Houses now, I new houses, you rarely see carpet. I don't know. I'd have to think about that one carefully. Books, I said books a long time ago. Barnes and Noble, I thought, had no reason for existence. I saw Blockbuster having no reason for existence as early as the early 2000s, 2002, 2003. I didn't think it had any reason for existence. Same with all of those stores that sold CDs and DVDs. I saw no reason for existence on any of that. Um, mm, I don't know. It's a good question. I think before you make that decision, make the applied level as a recurring fee. You would warn us because I'm planning to buy. I telegraph everything in advance. I telegraph everything in advance. It will probably be sometime in mid 2025. So in about 8 months, that's probably when I'd be thinking about, okay, we're where we need to be right now. If you do financial valuations applied, would it be included with current paid applied? Anything I do will always go into the applied level. Anything I do. So even if I do something and I upgrade something to spin it out as a standalone, it would go into the applied level. The reason I need a large group in the applied level is you need some way of getting feedback from a group of people, from the market, before you put something out there. You could put something out there and get feedback and then adapt, or you could have a group of people where you throw everything into first and you see what happens. Okay, nobody watched this. Good. I don't have to do any more of it. Everyone's watching this. Great. I got a couple of people who pointed out, well, you missed this and you missed this and you missed this. It's you look, you go, yeah, you're right. I did miss that. You make a note. Okay, I'll have to change that. It gives me a chance to perfect a product before I throw it out there. So yeah, you're sort of like a big test market for me. Thank you for all the wonderful videos. Like I was able to pass level 2 and 3. Great. When do you think you will do recurring fee thing with applied series? I don't think I'd make it a recurring fee for the applied level. What would be the point of making it a recurring fee? No, I don't think I'd make it a recurring fee. The only time you do something like that with a recurring fee is if you had um, uh, huge amounts of content going in every month, where there was always content coming in and content leaving, content coming in and content leaving, um, which I do not have because it's only me. So it wouldn't make sense to have a recurring. What was all the balloons? Did somebody make the balloons go up, or did I make the balloons go up? Did you see all the balloons just go up on the screen, or am I losing my mind? I just saw a bunch of balloons go by. I don't know what I did. I didn't hit anything or do anything, but balloons just went by. I don't know what's going on with this new computer. I will say this though, this is really creepy. Is I'll be talking in here to some people, and then I'll sit down and I'll be doing something, and then an ad comes on about exactly what I just talked about. And I'm thinking, okay, I'm being listened to. How the hell am I being listened to? I don't have any Alexa or anything like that going on in here, but I swear my devices are listening to me, or I'm going crazy. Something. Maybe I'm not even doing a live feed right now. Maybe I'm sitting on a bus stop in public just talking to myself. Doesn't look like I'm doing that, but maybe I am. Wouldn't that be wild? I think I'm doing a live event, or I'm in some kind of insane asylum and I think I'm doing a live event, but I'm really just sitting at a table rocking back and forth really fast. I saw balloons go by. Somebody tell me you saw balloons go by. Where'd I leave off? Yeah, I wouldn't be doing recurring fee with the applied series. Do you find value in ratio analysis on rear-looking numbers? My company currently uses that in their model. Backwards looking is tough, right? I really don't believe walking backwards through woods is a good idea. I agree with you. I agree. I think what happened last year could be very different than what the plan is going forward. I don't know that trailing multiples make a lot of sense, but forward multiples, one part of the multiple is a guess. You have the price, everything else is a guess. So at least with history, you have something that actually happened. But with the future, you have something that potentially could happen. So I guess there's an argument both ways for using it. Any specific industries you expect to grow the most in the next 5 to 10 years? Cybersecurity is going to be big. I think a lot of growth there. What else? Well, I think I don't know. That if I had to pick one for sure, it would be that, because criminals are not going away. And if the tools for criminals become more powerful, you need more protection. Right? It's like I said in the market outlook, you can't sell a bad guy an AK-47 without selling a good guy an AK-47. It's an arms race. Will there be any period in the future where the offer to be grandfathered in will be for a limited time, or it'll just be gone? It'll just be gone. Yeah, it'll be gone. At some point, there is a limit to how long I can do that for, because it's not a sustainable business model. You have to add something next. It's okay to do that in the beginning. It's okay to build your audience with that, but then you must move on to something else. You have to. What did you mean by don't ever let her go? I hope that you live a good life, and that at some point you could look back on some great love you had, and it brings you happiness. I really do hope that you can do that. Let's just leave it at that. What are your thoughts on ASML? Well, I still think they are what they are. I still think they have a basic monopoly on lithography. And lithography is the key machine you need. Are you going to take a chance? Because these things are expensive. Are you going to take a chance on Canon's new lithography machine when ASML is proven with support? Proven, right? Are you going to take a chance? No, not at those dollars. So it's the barriers to entry are incredible on this thing. Are incredible on this thing. So is it always going to have great quarter after great quarter after great quarter? Not really. So, you get to a point where great quarter, great quarter, great quarter. Well, everyone's got these things. We got to wait for capacity to fill up in the industry and more demand to show up. And then who's going to win? ASML. So the pullback was great. I sold 560 puts on that one. 100 and we got to 680. I sold 560 puts. Still good return on that. Looking good. Costco has great protein brand called Lean Fit. Their sports. Oh, I don't get into that stuff. Super clean for post workout. Yeah, I'm not into any of that stuff. Not into any of that stuff. If I can't find it in the natural food section, natural meaning vegetables, meats, anything with one ingredient. All of my diet is one ingredient. Because what's in eggs? Eggs. What's in meat? Meat. What's in a tomato? Tomatoes. What's in cucumber? Cucumber. I don't have anything processed. Nothing processed. Well, the maple syrup, but I mean, I do one coffee a day with maple syrup, and that's it. No, I have nothing processed. Oh, sorry. I do like the brick cheddar cheese, a little slice of it every day. I do like that. But beyond that, everything is one ingredient. So I'm not into the shakes and the supplements and any of that stuff. I'm not into that at all. Currently with the trainer, went down from 116 kilograms to 104, about 2 months. That's sustainable. That's good. 12 kilograms, 2 months. Goal is 90. Minimum 7,000 steps, 4.5 liters of water, 3x strength workouts work good. Someone must be, that's the handle, must be, oh, hang on, 90 kilograms. I'm thinking 90 pounds. I'm thinking someone's going a little too far. 90 pounds, 90 kilograms. Okay, that makes a lot of sense. 116. What is that? 232 and 22, 240, 245, 250. You're 104, 208 and 20, 228. Okay. 90, 180 and 18, 208. Yeah, I think that's probably where I'll end up, somewhere just a little under 210. You're pretty much where I was. I just think better in pounds, even though I live in a metric country. I think better in kilometers than I do in miles, and I think better in pounds than I do in kilograms. If we don't consider IV, the price of the put should be equal to the price of the call for the same expiration. If you have two conditions: for the price of the put to be the same price as the call. It says for the same strike and expiration. No, a little bit off. For the same distance away from the stock price. So it can't be the same strike, because if you have a stock price at 55, the $50 call would have $5 of intrinsic value. The put would have no intrinsic value, so they cannot be the same price. If you have a stock at 55, the $60 call, which is $5 out of the money, and the $50 put, which is $5 out of the money, would have the same price if they had the same implied volatility and the interest rate were zero. They would have the same price if that were true. If they had the same implied volatility with an interest rate of zero, they would have the same price. We're also assuming a European option with a non-dividend paying stock. Lots of assumptions. What do you think about mean variance optimization? Do you think it's useful? I think it's built on a mountain of assumptions. So the output is something that in reality probably has an extremely low probability of ever happening. That you would get exactly those returns with exactly that volatility, with exactly those correlations between the asset classes. So it is built on a mountain of assumptions. It is a guess. It is a very scientific guess on what is otherwise a full out guess of what the inputs are. So your output is just a big guess as well, right? Doesn't matter how scientific your process is in going from, here are my guesses. Do I have precision? No. You have you have a big guess on the outcome, because you're not going to get it. It's just not going to happen. So if that's optimal and you're not going to get it, you have to live with the fact that, well, everyone has suboptimal portfolios, really, because no one could know what all of those inputs are until after it's over. You can be in the neighborhood of it. So I think it's a good first step, but to get tied to the idea that I should rebalance back to my SAA because it's optimal is just like, no. Why don't you like leverage ETFs? I already explained that. Why dislike one way when both are the same? You said better get the normal ETF and leverage all you want. Yeah, the normal ETF has compounded returns. If you leverage it, you're getting leveraged compound returns. A leveraged ETF that has embedded leverage in it gives you 1 day return only. 1 day return only. So it's not the same thing. It's very different. Maybe because leverage, and there we go. LCT crew here, baby. What support you talking? I don't know what that means. What's your view on long-term US 20, 30-year treasury yields in 2 to 5 years? Lower. Where? I don't know, but lower. You said you were considering Panama as your new fiscal residency because you only have to stay there 1 month, but now you discover Costa Rica is the same. Correct. Are you planning to stay in Costa Rica? I am. You can't stay more than 6 months and a day in Canada. 6 months less a day, or any other country. Correct. If not, will you consider a fiscal resident of that country? Yes. So it'll be Canada for 5.5 months, Colorado for 5.5 months, and Costa Rica for 20 days. Yeah. Chemistry degree here. You can produce any element in the lab, including gold, but it's extremely energy intensive, as it would be. I imagine it would be. An element is just a ratio of protons, neutrons, electrons, so difficult to stabilize. There we go. Because the sun can do it. That's what the sun does, is it takes two particles, it fuses them, and you create a heavier particle, and that drops into the center of the sun. And it just keeps dropping and dropping. But it would be hugely energy intensive to do, to the point where you may as well make gold $15,000 an ounce. The ocean has literally tons and tons of gold, but you'd need $15,000 an ounce to get it. I don't think that you could create gold in a lab, an ounce of gold, for less than $15,000 using any kind of process for energy. I don't even think the amount of energy to create it exists. The amount of fusion you would have to do, the amount of energy you need to fuse, just single, what is it? Hydrogen, to fuse two hydrogens to helium. Do I have that right? If you fuse two hydrogens, you create the heavier element helium, and you fuse those two. And I'm trying to remember back to high school chemistry, of which I don't remember very well. About charts, don't you think it's hard to remember all of them? Like there are ocean of them. I don't worry about that. Is quantitative trading an advanced version of technical trading? Not really, because you can have fundamental quantitative trading where you're actually just looking at fundamental data. You're right. You can compress carbon to make diamonds, but we can't break atoms to create gold yet. I don't think he's bothered with the CFA, but I don't know that. How do you deal with the wealth tax when people try to change you more because you have wealth, charge you more because you have wealth? People do. What can you do about that? Successful people do pay a wealth tax. It's just we pay it to other private individuals. We pay it to private companies. You get a plumber, an electrician to come out to your house, you're not getting a deal. In most cases, you'll pay double what somebody on the other side of town would pay, because you got it. They know you got it. I mean, they know, they walk in, they know you. You're not crying poverty, right? So there's not much you can do about that. And they will charge you more. So, the idea that the government wants to charge successful people a wealth tax, we already pay a wealth tax. We just pay it to people. We already pay a wealth tax. Air Canada charges me a wealth tax. My ticket is always higher than somebody else's. My first check bag is higher than somebody else's, always. Amazon charges me a wealth tax. Two people, I can have somebody sitting right beside me on their device, and we can go to Amazon, look at the same thing. My price is higher. My price is higher. So I'm already being charged a wealth tax. Already. If the government wants to charge wealth taxes to successful people, then they have to outlaw discrimination pricing for successful people. Is that you cannot charge more to a successful person than a less successful person. You must charge the same rate to everybody. Otherwise, it's a crime. Only the government has a monopoly on the wealth tax. But you cannot let private enterprise charge me a wealth tax and you charge me a wealth tax all at the same time. At some point, I'm tapped out. Right? At some point, it's like, no. I give. I'm tapped out. It's this. Everybody wants to get their beak wet. Can't have that. You said a neighbor wanted to charge a ridiculous amount for improving the water pressure, and you did for much less. No, it's not a neighbor. A plumber came by in Costa Rica. It was after the exchange. It was $4,800 US to increase my water pressure. And they wouldn't have been able to do it with the solution that they had. They would have just created another problem. I needed a new control panel, and in getting the new control panel, we realized that the bladder tank that was there was too small, so the pump was turning on about every 30 seconds. Can't have that. If it's turning on every 30 seconds to maintain the pressure in the bladder pump, you'll blow out that control panel in no time. And the control panel, like I say, wouldn't have solved the problem. So it would have been 48, and oh, you need this now. Well, how much is that now? I got a control panel for under $1,000, $900. I got the control panel installed for less than 200, but I paid 200 anyways because the guy was there all day. I gave him $200 anyways. And then he mentioned that the pump was going to work a lot because this bladder tank is too low. So now the pump only really works about every 2 to 2.5 minutes. So you cut your utility usage down by 75% by buying another pump. So that cost $1,200, and the labor cost, and then the parts and everything cost about another $250. So I'm $2,650 into what would have been $4,800 for just a control panel, right? By piecing it together myself. One person saying, well, here's what you need, here's the advice you get, and you get another person, pretty soon you could piece it together for half the cost for a complete solution. Now I have a pump that operates only 25% of the time, not 100% of the, not, like a 75% drop in the utility use of the pump. I have a control panel that's not going to burn out now, and I have a bladder tank that's much, much bigger. So the water pressure has gone from 20 psi to 60 psi. I want it up to 70 because 70 is what you get in residential areas in Canada. You get 70 psi. I want to go to 70, but we're going to run it at 60 and walk it up to 70 because there is some concern about whether or not the plumbing throughout the house can handle 70 psi, or is 60 going to be good enough? Let's find out. But yeah, I was able to do it. You got to do a lot of your own research and your own learning about getting it done. Do charts have patterns like they repeat themselves? Everything in life has some kind of pattern that looks repetitive. But in all of these patterns that look repetitive, sometimes you get the same kind of outcomes, sometimes you get different outcomes. It doesn't necessarily have to be the same. Chart patterns are 50-50. You see a chart pattern, flip a coin, and you'll be right. You'll be right just as much as a technical analyst. How do you know when you are in the situation that people want to take advantage of you? Well, and the price is just when you live a long enough life, you've paid for enough things that you can get to the point where you can say, that doesn't seem right. That seems unrealistic. Or you get the quote and you look at the price of something and you Google it, in the US, and you could see the price of it. You go, okay, I know that there's a 30% import coming into the country, but how do you get from, $600 US to suddenly, I think the part that they were charging was 1.6 million colonies, 3,200. How do you go from 600 to 3,200 for the same thing on a 30% import? That's a success tax. That is saying, well, have you seen his house? He can afford it. He's not going to know the difference. These guys don't know the price of anything. Bullshit. We're very well aware of the price. We're successful because we know what we're doing, not in spite of it. Right? If I were a lottery winner, yeah, go ahead and hit me. I probably don't know the difference, but give me a break. I know how much things cost. Yeah. Same with the roof. I got the roof, my whole roof fixed way, way cheaper than what I was quoted. Just by going past that person who says, I know somebody, and going right to the people who actually do the work. They get paid dirt in Costa Rica, by the way. Somebody will tell you, I can get that done for $1,000. They'll give somebody $50 to get it done. They'll take $950. A ridiculous price. And the person doing the work gets 5% of the full price. That's a crime. That's a bloody crime right there. You're knowing that person was not worth 95% of the bill, but that's what they do. So it's better to go right to the person and then pay them more than their bill. And it's still way cheaper than paying that middle person who says, I know somebody who can get that done. Yeah, I bet you do. I bet you do. A lot of that. Unless there's no gold left in the earth and our significant tech advances, not economically feasible to synthesize gold. I agree. What do you think of the financial sector as a starting point, fundamental investing? Challenging, but it doesn't matter what sector. You'll just get to know it. Costco model. How are you coming up with the calculations and the schedules? Is it just through understanding how the company works? Yeah, most of it is in the 10K. Some of it is you look at past relationships between variables. So, for instance, for inventory, very, very tight around 30 days. If you look at the average inventory versus cost of goods sold, merchandise cost of goods sold, you'll find it very, very tight at 30. Very, very tight at 30. So, being that it has a very consistent 30 days and their payables are very constant around 32, there's nothing that needs to be fixed. So I don't have to say, well, they got 75 days of inventory. They said over the next year they're going to get it to 30. So you'd have to model a walk down to 30 on the days. This is a constant 30. So you can grow your inventory at the same rate that you grow your revenue because the relationships are stable. So it would grow at the same rate. So, it's you have to know the company. You have to be an analyst and say, well, what are my assumptions? So there's the analyst who creates the assumptions. There's the modeler who takes the assumptions and creates the model. The model is the least interesting part. Once I show you how to build a model, you can do that with any company if you have the assumptions. The hard part is the assumptions. That's the hard part. We do that. We don't shy away from that. This week we're doing the debt and interest schedule, which means what's our interest income, what's our interest expense. You have to do them together. Reason is that there are some companies that rely on short-term financing because of their level of cash. If they fall below a certain level of cash, they bring on short-term financing. So you're not going to get your interest expense unless you get your cash first. But your cash generates interest income. So usually it's cash, your revolver, and your debt. So you have to do it all together. We're doing that this week. Weird question. You've often said you take a lot of handwritten notes. Yep. Do you have a favorite pen to write with? I really like Uniball. My favorite pen really is this simple little blue thing right here. This is a Bic round stick. Bic round stick. This I like. I don't know why. It just the way that I write, I kind of like it. I was given these pens, these Galaxy type pens, that have you can see that type of end on that. I don't like those. I don't like them. I don't enjoy them. These are cheap and they're beautiful. They're smooth. They roll nicely. They don't leave big ink spots. They don't smudge. I can do this on the sheet after if I move my hand on it, and I don't get these big ink tails that spin off because it leaves too much ink. Just the cheapest pen. Works really great. Druckerman recently mentioned that he's short duration. He said companies, it compares the U.S. 10-year to the U.S. GDP. Hence, his short. This is a flawed theory. Well, then he should be long Japanese 10-year. I don't know how that's going to do for him. If it works for him, it works for him. He can go ahead and be short. I don't think that I would. I would disagree with that. He may have something that in his history has worked fairly consistently, but he may not think about the same things I think about on a going forward basis. I think deflation is the name of the game going forward, and that the Fed will have no choice but to go to the zero line because of deflation and because of the sheer cost of the debt. I think they have no choice, regardless of any past relationship that you've seen. I think they have no choice. That's my thesis. I cannot be wrong, because no matter what I buy, if I continue to hold, I get the yield. I get the yield that I bought it at. All I can do is underperform, but I cannot lose. Gold can only be made using a particle accelerator that costs many times the price of gold. There you are. Can you comment on the rally in gold this year? What's the cause, and do you think it will continue? I think it will continue for a number of reasons. Dropping yields. rising interest from central banks, no fall back in the demand for jewelry, and with rising debt, and it appears to be more and more rising debt around the world, here we are. And as long as we keep saying, oh, this is going to be inflationary, that's going to be inflationary, that's going to be inflationary, gold is the hedge against that psychological thinking. So it's, there will come a point where we're going to realize that we live in a deflationary world. It will be then up to governments to determine, do we keep issuing more debt or do we stop? And deflation is a bad thing for a government in debt. You need inflation. So the central bank's going to do everything it can to create inflation, which means quantitative easing, buying debt, doing everything. Gold, I think, has a beautiful future ahead of it. You said it's hard to beat the market. If you're limited to the S&P 500 and only the components in the S&P 500, it is hard. Yes, it is. Then why would anyone give their money to asset management and not just invest in the index? Always a good question. I ask that question myself as well. When you look at, well, what am I invested in? And if it looks like the S&P, the question is, well, or what's your benchmark? Well, the S&P. Well, then why not I just buy the S&P if that's your benchmark? Because you're not going to beat it. Not after fees. Not after fees, you're not going to beat it. So I agree. Why bother? Private wealth management lessons on level 3 sucks. When you say the lessons, I don't know, you mean the readings themselves? Yeah. I'm noticing real estate is bouncing back, especially townhomes in terms of pricing and activity. Just want to learn the market, use the applied level, or is it only for CFAs? No, it's not for CFAs. If you're a CFA, you'll recognize a lot in the applied level as saying, oh, I learned this part in level 2 or 3. And then you'll see it applied. You'll say, okay, well, I see how it travels to the real world now. You'll just be more in tune with or pay more attention to certain things because you'll actually see it applied, as opposed to just being written on the pages of a textbook. But no, you don't need it behind you. Seeing as you view utilities and copper positively, is there any reason why uranium and nuclear wouldn't fall in the same camp? All priced in, ridiculously priced in. Entrepreneurial path for a new charter holder versus a traditional buy-sell analyst managing a small book. What sort of fee structure would you use? Well, I think there are industry standard fees. I don't think that you can go too far outside of that. If you think about potential in these markets or an entrepreneurial path, CFA breaks down now into 3 sort of big schools. You have security analysis, asset management, and wealth management. Wealth management is obvious, private practice. You can set up your own shop. You don't even have to be an asset manager. You could simply just be a financial planner, a wealth manager, and say, we should get you into these funds or these funds, and you have your sponsor fee that you charge. And then your job is to select managers for different funds and to put your client into different funds, but you can build a book and sell your book. For asset management, what's the entrepreneurial path there? It's hedge fund. If you're good, if you have some skill, if you're better than the person beside you at picking winners, there's where you would go. So with CFA, you learn asset selection, portfolio construction, risk management. Those are the critical things to learn for that. For security analysis, you can set up your own research firm, right? Whether it be macro, fiscal, monetary, sector specifics, whether it be a whole sector, a whole industry, a sub-industry, particular securities themselves. All of that you can learn through CFA. So you don't necessarily have to be a job taker. You can, take it with the view of starting your own research firm, take it with the view of starting your own fund, your own hedge fund, or take it with the view of starting your own private wealth management practice. So there are plenty of entrepreneurial pathways in CFA, plenty. I thought of doing a video on that at some point, and I thought, I'm sure everyone's aware of that. I would just be saying things that everybody already knows. What are your thoughts on the debate between Saxon Freeberg and all in on nuclear? I've stopped listening. There was another one out this week. I turn it on 5 minutes in. It's still the political conversation going on. I stopped. It's like, yeah, I can get this everywhere. I just simply stopped. I've lost interest. I've really lost interest. Unless they're going to talk about their world, unless they're going to talk about venture capital and the view that they have, considering where they sit in the value chain of firm creation, I'm not interested. I can listen to, well, why is their political view any more important than my neighbor's? Why? They get one vote, just like my neighbor gets one vote. Why is theirs? I'm done with the political stuff. It's everywhere. It's too much. Everyone's on a team. Everyone's on a team. You know exactly which team everyone is on. You know exactly which team everyone is on, and it's just, I've grown bored of it. It doesn't have anything new or interesting. They've gone way too far afield. They're trying to, I think, appeal to their listener and trying to be too much and being in too many places. And now I don't even watch. I don't think I'll tune in anymore. I don't really have an hour and a half to sit around and listen to it anyways. And when it's just, I think about something that I think about and that they have no better experience about than I do. They have a view on the venture capital world that I don't. Stick with that. Tell me about that. Anyways. I think portfolio construction module is easy to understand. Sector studies can get a little tough. Do you have monster dividend portfolio? Not really, but I do like dividends because I like getting paid to wait. I did accounting in uni and now taxes, and I'm interested in learning stocks, markets, and finance, so I feel like I'm a beginner. Everyone was a beginner at some point and everything. You were a beginner in accounting and taxes at some point. Everyone's a beginner when they start. Need to study for CFA, but I really like this live. Do you think Trump and Kamala are the worst candidates ever? I think they are exactly what the voter deserves. If they're going to continue to abdicate their responsibility to elect qualified people, you get what you deserve. I think they're the candidates that the voter deserves. CFA level 1 content similar to a minor in finance? Not really. CFA level 1 is similar to maybe year 1, year 2 of a finance program. Do you think you will fire Powell within a year? I don't think it's. I don't think it's a situation. It's as easy of him saying you're fired. But Powell's already lowering rates. Powell understands he works in a political city, in a political environment. He's not going to tell the president to stay out of things. He's going to go along to get along. Financial modeling course better than Wall Street Prep? Yes, it is. I do have. I have Wall Street Prep on my tab. I do have a subscription to Wall Street Prep. I have the premium. I paid for the full amount because I got to benchmark myself. If there's somebody out there that's doing a really good job, well, then let them do a really good job. Can I do better? And I'm following along with one right now that is using Apple, and looking forward to it, and brings up JP Morgan's analysis and says, okay, so here's JP Morgan's forecast for revenue growth, so we're just going to use that. It's like, whoa, stop. That's all the interesting stuff right there. If I was taking this course, I said, okay, now I'm going to use Freeport. Can you please give me JP Morgan's estimates for Freeport? Why don't I just read JP Morgan's report on Apple if I'm going to use JP Morgan's assumptions? Why not just use JP Morgan says overweight? Hey, I'm done. Let's overweight Apple. Thank you very much. But if I'm just going to use their assumptions, what the hell am I doing? Right? So, yeah, I'm better. They have more content than me, but only because they've been at it for 15, 20 years. I will have more content and I will be better. I am better than the content they're providing, because we start from Costco and we're not using anybody's estimate. We're saying, how would we think about memberships? How would we think about merchandise revenue, right? How would we think about where these things are going? And in thinking about it, we have to think about, well, now in merchandise revenue, we got member rewards. So we got to figure out how to get these member rewards and what's the accounting behind that. For membership revenue, well, it's on a deferred basis. So we have deferred membership revenue. Well, we got to think about that because they have a cash impact. So how are we going to adjust the cash flow for it? So we develop all the assumptions. We don't just say, here are all the assumptions. Show me what you can do in Excel. Excel is just a tool. It's like watching a carpenter and being amazed at his hammer work. That's great hammer work. Where'd you learn how, with a hammer work like that, you can build anything, can't you? It's like, it's just a tool. You still had to design the cabinets before you took the hammer out, right? So if you cannot take a 10K and come up with the assumptions, financial modeling means all you are is an Excel monkey, and that's the job that you will have as an Excel monkey. They don't get paid a lot. Let's just be straight about that. An Excel monkey doesn't earn $300,000-$400,000 a year, but an analyst does. An analyst can be worth $600,000-$700,000 a year. You're the one that's looking at the company, looking at the industry, and coming up with the assumptions. You got your list of assumptions. You say, hey, Excel monkey, model this. And the Excel monkey just models it for you. So Wall Street Pep, Wall Street Oasis, they're training you to be Excel monkeys. They're not training you to be, and CFA is training you to be an analyst. So you say, okay, I know how to be an Excel monkey and I know how to be an analyst. But when you give somebody a 10K, you say, okay, well, model this. Yeah, but aren't you going to give me the assumptions? No, that's what the analyst does. So the financial modeling I have is analyst to Excel all the way through. You build a model. The model is the least interesting part. It's how do we get our assumptions to begin with? And then, of course, there are ways in which you would model it. You'd want to know how to get that done. But if you can't start from a company and generate your assumptions, what's the point? So when I started watching it, we're going to use Apple. I said, okay, this will be interesting. Maybe I'll even learn a thing or two here. This will be great. And then, okay, here is a document. We're going to use these assumptions and these assumptions. This is it. And then there was one whole section on the cash flow statement, which just really taught level 1 CFA the reading on cash flow and showing how things should say, well, that's not really modeling anymore, is it? I'm generally disappointed in what I've seen. So I can say, in terms of financial modeling, and I'm not saying it to brag, but when I'm done with this and then I upgrade it to give it a much more professional look, it will be one of the single best financial modeling courses out there, because it will be everything from here's the 10K to here's your model. And we're not just going to rely on somebody saying, well, revenue is going up 6%. Oh, okay, I'll increase revenue 6%. Anybody in grade 9 can be taught to do that. That's not a skill. And you're not going to make a lot just being an Excel monkey. Sorry to all the Excel monkeys out there, but it doesn't matter how fast you run your keys along the keyboard. You're only worth so much money. Where did I leave off after that? Oh, there it is. What happened to options after the dividend? I can only close but can't buy. I'm not sure. If you want to be long on an undervalued stock for several years, would you buy and hold the stock or long-term call? Buy and hold the stock. If it's a dividend-paying stock, I'd be long. I'd be long the stock. Some value investors believe that standard deviation is not a measure of risk, but volatility. Standard deviation is a measure of volatility. Hence, it's okay to be in losses even for years in individual stocks if you believe market is wrong. I don't know if I'd go that far, but volatility, standard deviation is a measure of the volatility. We just say volatility equals risk, right? And we make that shortcut saying volatility equals risk. In some cases, that can be true, that you can say, okay, volatility approaches risk in some cases, but if you have more of a small cap stock or a deep value stock, the volatility may not equal the risk. The company may be at risk of disappearing, at risk of insolvency, at risk of bankruptcy. It may be quite high, but volatility is not showing it because it's priced so low that the market says, well, until we know more, this is where it's going to be. It might generate very low volatility, but be a very high risk stock. The opposite could be true, where you have a stock that generates a lot of volatility, but may not be very risky at all, or less risky than what you would think. So we have to, I do think there is some truth to saying, that standard deviation is not risk, it is volatility. Can volatility be a proxy for risk? Sometimes, but be careful, not always. Okay, and losses for several years. Well, if you're in value stocks, you do have to have patience. Sometimes these things take time to play out. So you have to have patience, which means if you want to do better than what the stock is doing, better have a dividend, and you better be able to use the options, right, to generate a yield while this thing is doing what it's doing. But when it does hit, these things tend to hit very nicely. It's the same as venture capital. Venture capital, you're going to invest in businesses, and your portfolio is going to lose money for a number of years. You have a J-curve effect that might be 3-4 years before you actually start seeing net asset value of the fund being positive. But that you only need one in that fund or two to really hit, and you have an incredible return, knowing that many of what you'll invest in will not go anywhere. It's the same thing with deep value. Is when they do hit, you can really get some fantastic return in there. So while it's down and paying dividends and you're using the options, any money you earn on it should go into buying more of it, is because that money is not your money anymore. That's money that you generated off the initial investment that you made. You're reinvesting the income that you're making on that to get a bigger and bigger position. So when it hits, you really outperform, but you got to have patience. It's not one of those things like, oh, it's not going up. Yeah, but it just because you buy it doesn't mean it's going to go up from the point you buy it. You have to understand what you're buying. The idea of chasing gains every day, it's not going up. I want to get into stuff that are going up. At some point, you're just going to blow up if you keep doing that. Where are we on time? 2:57. It's 10:13. Let me scroll to the bottom of the list and read up. So we got about 10 minutes left. Let me see what I can get done here. Would you expect as base and worst and best case for your TLT trades? What would you expect as a base case? Base case, I expect 88 basis points. I call it 90 basis points of lower yield on the 30-year over the next 8 months. That's my base case. Best case is something breaks in the economy on the way there, and rates have to go down very, very quickly. Even a better case is that the balance sheet runoff that is going on right now creates some problem in the repo market where rates increase. The Fed realizes that they've gone a little too far and that they've already hit ample reserves and they need to increase reserves, and they start quantitative easing again. Oh, beautiful, beautiful. Love that. Worst case scenario, I gotta continue holding duration for a period of time. It'll just take me longer to get there. Right? Can you do a life advice stream? I don't know that I'm the kind of person you want to take life advice from. although I have made my share of mistakes in life, some of them big ones. I think if you're going to take advice from somebody, you want to take advice from somebody who's made mistakes. Yeah, I get that. Unless I say something, this guy's going to keep hitting me. I just don't know that I have much to say about that. When you say most money managers do not perform the market, do you mean beating I mean beating their benchmark. I shouldn't say the market. The market is whatever their benchmark happens to be. Most money managers do not beat their benchmark, whatever their benchmark is, and whatever fund they're running, small cap, mid cap, large cap, bond fund, domestic, international, most do not beat their benchmark after fees. I'd say 5% after fees would beat their benchmark. After fees, you end up doing worse. Will Google Sheets work, or do I need Excel? You really should have Excel. Okay. Can you explain the relationship between government spending and gold? It isn't so much a relationship, but sort of a sentiment is that if you have government spending continuing and you have deficit spending, the debt is going to increase. And if the debt is going to increase, you're going to have a higher interest cost, which means you have higher deficit spending, which means the debt's going to increase, and you keep increasing and increasing and increasing, which will devalue the value of the dollar, because all that spending will be inflationary, hence gold. That's, in a very simple way, that's the relationship. If someone with no degree but 4,000 hours as a financial advisor for Big Five could theoretically write and pass, oh yes. When we say yields are falling, it's a good opportunity in bonds. But actually, when yields fall, don't bond prices rise? And we should be selling them. Why would you want to sell something that's going up? If we think yields are going to drop, it's a great opportunity in bonds. If you were in a stock and it was going up, would you say, oh my God, get me out? And if it were going down, you'd want to get in. It's the opposite, right? When it's going up, keep them, right? How to study consistently for long hours. I don't think you should study for long hours. I think the maximum amount of time is 45 minutes to an hour, then take a break, right? The productivity of your brain drops after a certain time, so that your most productive hour is your first hour. So try to get as many first hours as you can during the day. Instead of saying doing 3 hours, do 1 hour, in the afternoon, do another hour, and then in the evening, do another hour. Try to spread it out as much as you can. I think he's only reading Twitch subscribers. Oh, that's a continuation from some other comment, right? Two fingers as a sign make the balloons come up. Look at that. Balloons. Okay. I don't know when I did a peace sign. Maybe I did. Maybe I was saying okay. No, you can't do that. Maybe I was saying like okay, and I don't know. What's in meat? Meat. Well, I mean, it's nothing processed. I mean, everything has something in it. And the point is, I'm not eating processed meat. It's just meat. All right. I think we're done here. Modeling video tomorrow, Tuesday. Tomorrow. It's supposed to be Mondays. But when I sent it in last Monday, I didn't get the notification until Tuesday that it was up. It's supposed to be up the same day. So tomorrow I'll be sending my videos in again around 11 o'clock. And hopefully they're up on Monday. I guess it was a queue for because you got to put it onto Amazon, then you got to render them on Amazon. I guess it was a big queue because somebody else had uploaded a whole bunch of videos as well. Do you like coffee, Chris? Best snack candidates after. For chocolate bars, when I did eat them, yeah, I liked Coffee Crisp, and the other one I liked was Crispy Crunch. Coffee crisp and crispy crunch. But I don't eat that stuff anymore. All right. All right. I think I know I didn't get to all the other ones at the very end, but I think we're good. And where's the market? Up 5. Yeah, you can't tell much. I don't even know why I do this to myself. Why do I look at it? You can't. You wake up tomorrow and until the Americans show up, all this is meaningless. So we'll wait for that. Anyways, 3 hours. I will see you next. Oh, should I move the live to noon? Should I move this thing from 7:15 p.m. on a Sunday night to noon on a Sunday? Somebody suggested that I move it to noon. I'm okay with moving it to noon. If everyone thinks that noon makes more sense, I'll move it to noon. That's not a problem. I'm getting a bunch of yeses. The only problem with moving it to noon is I don't right now. Globex is on, so I can see where the currencies are, where gold is, where treasuries are, where the market is. But then again, it's all meaningless till the Americans show up. So I can move this. I can move this to noon. It's just we won't have any look into the market. I'm seeing a lot of yeses and a few nos. All right, well then it's going to be noon. You got to go with democracy, and I'm seeing democracy in action here. So noon it is, and there's a replay on this, so it'll replay. I mean, you can watch it after, but I'm seeing a lot of. Oh, I'm seeing some no's down here, seeing some yeses. Why don't we try noon? Next Sunday, let's try noon. Let's see how it goes. All right. My voice, I've done 2 live events today. I've been talking for 6 hours today. My voice is done. It needs to be quiet for a while. All right. Ciao. One guy saying yes over and over again. Is it one guy saying yes over and over again? Is that why I'm seeing a lot of yeses? Oh, Garvish. Garvish. You can't vote more than once. This is voter fraud. This is voter fraud. Somebody arrest him. All right. We'll try noon next week. We'll try noon. Let's just see what happens. If it doesn't work out very well, I'll also do 7:15, but we'll try noon. Let's see what happens. All right. Okay. Ciao.